Will come to order. Without objection, the chair is authorized to declare recess of the committee at any point. Pursuant to Committee Rule 3 and House Rule 11, the chair may postpone further proceedings today on any vote relating to any matter under consideration during today's markup. As a reminder, all members on the WebEx platform should keep themselves muted and should only unmute themselves when they are recognized. The staff have been instructed not to mute members except when a member is not being recognized and there is inadvertent background noise. Members on the WebEx platform are also reminded that they may only participate in one remote proceeding at a time. So if you're participating today, please keep your camera on. And if you choose to attend a different remote proceeding, please turn your camera off. To facilitate recognition of members who are seeking recognition, members are encouraged to identify themselves by name. For members who are participating in person, wearing a mask at all times while in the hearing room is indeed a requirement, including while speaking into a microphone when recognized. This is based on guidance from the Office of the Attending Physician, and the chair will treat wearing masks as a matter of order and decorum. Members who do not wish to wear a mask may participate virtually through the WebEx platform. We will be collecting and distributing amendments electronically to ensure all members have access to relevant documents in this hybrid format. Members who are participating in person are encouraged to have their own devices with them to access the amendments electronically. All amendments must be submitted to the committee email provided in the meeting notice. The amendment will then be given a unique identifier for reference and distributed to all members through an email list that was developed in advance in coordination with the ranking member. As is the chair's practice, amendments that are pre-filed will be given priority consideration. While we're trying to make this process as familiar as we can, we must recognize the limitations that go with ensuring the safety of all members. So I ask for members to be patient with delays and other limitations we face in this hybrid format. So without objection, all members will have 5 legislative days within which to revise and extend their remarks and to submit additional materials to the chair for inclusion in the record. I now recognize myself for 5 minutes for opening remarks. Today, we're here to mark up a series of important measures. I'm very pleased that following the committee's hearing in March on racial justice and racial equity, today the committee will be considering several bills by committee Democrats to improve diversity and inclusion and create fairness in our housing system. These bills include Representative Meek's bill, H.R. 1277, the Improving Corporate Governance Through Diversity Act, which would require public companies to report on their board and executive leadership diversity. Representative Beatty's bill, H.R. 2123, the Diversity and Inclusion Data Accountability and Transparency Act, which would make reporting of diversity data and policies to the offices of minority and women inclusion by regulated entities mandatory. Representative Green's bill, H.R. 2516, the Promoting Diversity and Inclusion in Banking Act, which would require federal banking regulators to evaluate bank diversity and inclusion policies and procedures as part of determining their CAMELS rating. Representative Cleaver's bill, H.R. 2553, the Real Estate Valuation Fairness and Improvement Act, which is aimed at addressing disparate impact in the home appraisal process. And my bill, H.R. 2543, the Federal Reserve Racial and Economic Equity Act, which would direct the Federal Reserve to address the racial employment and wage gaps as part of its mission. At this markup, We will also consider bills to strengthen disclosures by public companies, including Representative Foster's bill, H.R. 1087, the Shareholder Political Transparency Act, which would require public companies to report on their expenditures for political activities, and Representative Vargas's bill, H.R. 1187, the ESG Disclosure Simplification Act, which would require public companies to report and define environmental, social, and governance metrics. In the midst of the pandemic crisis, predatory debt collectors have made record profits while continuing with their abusive, harassing tactics while consumers struggle to make ends meet through no fault of their own. At this markup, we will consider my bill, H.R. 2547, the Comprehensive Debt Collection Improvement Act, which includes several measures by Representatives Velasquez, Meeks, Cleaver, Dean, Tlaib, Presley, and Auchincloss to protect customers, our consumers, from abuses by debt collectors. I'm also pleased that we will consider resolutions to reestablish the committee's task forces on financial technology and artificial intelligence. Finally, we will mark up the committee's views and estimates on the budget for fiscal year 2022. I would like to thank the members for their work on these measures and look forward to advancing them. The chair now recognizes the ranking member, Mr. McHenry, for 5 minutes for any opening remarks he may have.
Well, thank you, and I thank the chair for holding this markup today in person and online, just as Republicans have been asking for. This is the first step, I believe, towards resuming normal committee operations now that vaccines are widely available to all Americans. I think we're one step closer to the day when these meetings are held entirely in person. I'm hopeful for that day. We've got a long list of bills that we'll be marking up today in addition to the committee's views and estimates. I'll save my more in-depth comments for the debate, but I'll say this. Not one bill on the committee docket today is bipartisan, and not one bill has a Republican co-sponsor. And this is just another instance of a troubling trend. There is no more reaching across the aisle to develop policy solutions to meet the challenges of today. Democrats have given up on the hard work of legislating and negotiating in favor of a take it or leave it approach. Even though House Democrats hold the slimmest majority in modern history, they've decided to go it alone, and go it alone they will. Emboldened by their so-called one-party rule, they've tossed aside bipartisanship to cater to the far left and other progressives and stakeholders. There is no better example than the two mandatory disclosure bills, the ESG Disclosure Simplification Act and the Shareholder Political Transparency Act. Both bills are simply redos from last Congress. Neither one of these bills helps investors make better choices. Neither one of these bills will help everyday Americans save for retirement, help send their kids to college, or help them build a better life. It doesn't make us more competitive, and it doesn't bring more capital formation. These bills are about naming and shaming companies that do not fully agree with their progressive left agenda. But in effect, all these two bills will do is deter companies from going public and making being a public company more costly and ultimately more political, and ultimately hurting everyday Americans. Then we come to the Comprehensive Debt Collection Improvement Act, and it's no different. It's a 56-page bill of Democrats' greatest hits from last Congress, actually worst hits in my view. Everything from expanding the role of the CFPB over commercial contracts, removing predictive information from credit reports, to undermining rules that allow modern communication methods, some people will call them cell phones, but smartphones, to be used to recoup debt. If enacted, this bill will ultimately harm the very consumers Democrats say they're trying to help. It will fundamentally alter the credit markets, making access to credit harder and more expensive for all Americans. Additionally, it will harm small businesses who are simply trying to be paid for their services that they provide. So what we'll be considering at this markup is more of the same. Democrats are dusting off the same old bad proposals because they think they can get away with it. Ultimately, Democrats' political gain is American people's loss. These bills do nothing to return us to the best economy of our lifetimes experienced pre-pandemic. As always, committee Republicans stand ready to work across the aisle to support policies that help our businesses grow, their workers succeed, and families to prosper. But Democrats' partisan bills simply do not accomplish these goals. Finally, I want to thank the chair for reauthorizing the committee task forces. The task forces play an important role and help us understand emerging issues associated with technology. That's a good thing, and that's a bipartisan thing. And I want to thank the chair for continuing those conversations that we had long ago with the creation of the Jobs Act and bipartisan legislating that we had when Republicans were in the majority, and the chair authorized these committees when she got the gavel. And I'm proud to announce that this Congress, Republicans will be led by the gentleman from Ohio, Mr. Gonzalez, to lead the Artificial Intelligence Task Force, and the gentleman from Minnesota, Mr. Emmer, to lead the FinTech Task Force. They will each provide valuable insight and leadership for both Republicans and Democrats on the task forces. And I'd like to also thank each of our members for agreeing to, again, serve on those task forces this Congress. And so, Madam Chair, thank you, and I yield back.
Thank you very much. Pursuant to notice and without objection, the committee will consider two resolutions relating to the organization of the committees en bloc. The clerk will report the resolutions.
Resolution offered by Ms. Waters, establishing the Task Force on Artificial Intelligence in the Committee on Financial Services. Resolution offered by Ms. Waters, establishing the Task Force on Financial Technology in the Committee on Financial Services.
Without objection, the resolutions will be considered as read. I now recognize myself on the resolutions for 5 minutes. Today, I'm pleased that we will establish two task forces to continue work begun during the last Congress. The Task Force on Financial Technology, led by Mr. Lynch, and the Task Force on Artificial Intelligence, led by Mr. Foster, will allow the committee to continue to delve deeply into the technological changes underway in our financial and housing markets. As new technologies emerge and the financial services industry evolves, we must ensure that responsible innovation is front and center and that our regulators are equipped to go after bad actors as needed. Financial technology companies, or fintechs, comprise a rapidly growing sector of financial services. Through their use of new technologies, they have the potential to open up products and services to communities who have been neglected in the past. However, as we seek to recover from this unprecedented COVID-19 pandemic, we must ensure that abusive, predatory, and discriminatory practices do not occur, be it from traditional banking and credit providers or by fintechs. I'm also looking forward to our work investigating how the use of artificial intelligence, machine learning, and other emerging technologies are shaping our financial system. While consumers, investors, and small businesses may gain access to credit and other services due to these technologies, I continue to be concerned about the possibility that these technologies could have algorithmic biases, create digital redlining, and exacerbate racial or gender discrimination. I applaud the leadership of my two colleagues who will remain the task force chairs this Congress. Mr. Lynch is a longstanding champion on consumer protection and will lead the task force on financial technology. Mr. Foster is the only member with a PhD in physics in Congress and will lead the task force on artificial intelligence. As our financial services industry transforms due to COVID-19, we have an opportunity to harness technology to build a more equitable and accessible financial system for all consumers and investors. I sincerely hope that the fintech industry and companies using artificial intelligence can rise to the moment and help build a better future that is more inclusive. I yield back, and I now recognize a gentleman from Illinois, Mr. Foster, who will chair the task force on artificial intelligence, for 1 minute.
Thank you, Madam Chairwoman, for reestablishing this important task force. We did great work last Congress, and I'm very excited to expand on that success. Against the backdrop of a pandemic that's launched us headfirst into a more digitized economy, artificial intelligence is becoming more important every day. I look forward to working with Ranking Member Gonzalez and my colleagues on both sides of the aisle as we begin to consider specific actions that we can take to make sure that AI is a positive force in financial services and in the lives of all Americans. Thank you again, and I yield back.
Thank you. Mr. Lynch is not present. I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 5 minutes.
Well, thank you, Madam Chair. And again, as I mentioned in the opening statement, I'm grateful that the Chair continued the 2 task forces on technology for this committee. I think this is an area where we can have bipartisan cooperation if we have the necessary understanding of the nature of these technologies that can be deployed to help bring in a more diverse lending that is cheaper and more widely available in our communities. Last Congress, we were able to tackle many interesting issues in the task forces, and I hope that the task force committee members can engage in those bipartisan conversations. Look, as I said before, it's not a question whether or not change is coming. It's just how policymakers can adapt to this and how the industry can adapt to this. Frankly, the financial services world that we regulate out of this committee is being left behind by the pace of change in technology. And we need to get ahead of this. And that means understanding first, and so that we can legislate after we have proper understanding. So policymakers need to understand the innovations that we've seen in fintech, in the AI space, and the promise that they have to consumers and businesses alike. So not only can they streamline many time-consuming processes, expand access to financial services to underserved communities, and result in better, smarter decision-making, they can also save time and money. Those are good things. And so I'd like to take the opportunity to highlight the Republican report that was released today, summarizing our work in the task forces last Congress, from digital currencies. No, my mic is on, but maybe I've been muted. Well, that's probably a gift to people.
We can hear you.
They can't hear me in the room.
We can hear you every place else.
That's Ed Perlmutter, who says that with a level of disdain. But no, thank you, Ed. Look, I want to take the opportunity to highlight the report that Republicans released summarizing our work on the task forces last Congress, from digital currencies to cloud computing to algorithmic bias, which is apparently difficult for me to say. We've covered many important topics, and I think reflecting on that work that we've done so far can inform our work for the future. And so with that, I'd like to yield to my colleague from Ohio, Mr. Gonzalez, for 1 minute. He will lead the artificial intelligence task force for the Republicans. He's been deeply engaged in these issues of technology, not only from his work in getting a Stanford MBA, but since he got elected to Congress 2.5 years ago. Mr. Gonzalez.
Thank you, Mr. McHenry, for this opportunity and also for your many years of leadership on this committee, pushing for innovative policy solutions in this space. Look forward to working with Chairman Foster on this task force and also in the Science, Space, and Technology Committee on ideas that make sure that the U.S. remains at the forefront of financial innovation and technology. We should be excited and inspired by the opportunities created by AI, not fearful, and that's going to take thoughtfulness on our end. This is one area where I do believe we can work across party lines and on behalf of our constituents to build a more resilient financial system that creates jobs and improves the lives of everyday Americans. Thank you again, Mr. McHenry, for allowing me to take on this opportunity, and I yield back.
Well, thank you. I thank Mr. Gonzalez for his leadership and his thoughtful approach. I'd like to yield to Mr. Emmer for 1 minute, who is online, coming to us virtually.
I thank you for the ranking member for the opportunity to speak this morning. Thank you to the chairwoman and yourself for prioritizing the reauthorization of the task force on financial technology. It was absolutely an honor to serve as the ranking member of the task force in the 116th Congress, and I'm looking forward to building on our work during the 117th. As members of the House Financial Services Committee, our focus on financial innovation is imperative. Too many Americans still don't have access to the financial tools and products they need to improve their financial literacy, provide for a comfortable retirement, or help their kids get an education. Further, our entrepreneurs lack the clarity and certainty they need from the federal government in order to tap into the true potential of the latest technological advancements. During the 116th Congress, the task force examined the role of fintech charters, mobile payments, crypto and blockchain, and the use of alternative data in expanding access to financial services through technology. I hope the reconstitution of these task forces allows us to get a better understanding of what must be done to foster the growth and development of this promising industry and support the billions of people around the planet who can benefit from their success. Thanks again for preserving this committee's focus on this important topic, and I look forward to working with all of you as we usher in the next generation of financial innovation. I yield back.
And I
now
yield back.
recognize the gentleman from Massachusetts, Mr. Lynch, who will chair the task force on financial technology for 1 minute.
Good morning, Madam Chair, and thank you so much for once again appointing me to chair this wonderful task force. Good to see that I'll be working with Mr. Emmer again, I associate myself with his remarks as well. This is an exciting opportunity. I do want to just offer one cautionary note. As we looked at the CARES Act money that went out, our most recent report indicates that 70% of the fraud involved with the disbursements from the CARES Act was done through fintech. So fintech operations and other technologies associated with that. So that doesn't mean that we shouldn't go forward with all deliberate speed, but it should give us an indication that we don't have all the safeguards right now in place to allow us to fully exploit and optimize the use of fintech services. So we have an obligation there. We have the integrity of our financial system at stake. And while we do want to bank the unbanked and use the most of this technology, we want to do that in a careful way and one that protects consumers as well as the reputation of our financial system. So thank you, Madam Chair. It's an honor to serve, and I yield back.
Thank you very much. If there is no further discussion, I now ask unanimous consent that the resolutions under consideration be approved. Without objection, it is so ordered. Pursuant to notice, the chair now calls up H.R. 2553, the Real Estate Valuation, Fairness, and Improvement Act of 2021. The clerk will report the bill.
H.R. 2553, to establish an interagency task force to analyze federal collateral underwriting standards and guidance, and for all other purposes. Be it enacted by the Senate and House of Representatives.
Without objection, the first reading of H.R. 2553 is dispensed with. The gentleman from Missouri, Mr. Cleaver, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 2553 offered by Mr. Cleaver. Strike all after the enacting clause and insert the following. Section 1, short title.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Missouri for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair. This bill is being introduced and pushed by myself and, of course, New York Congressman Torres. And this is something that I think everybody, whether you're Republican or Democrat, can relate to, because it's something that's been around for a long time. This bill would require a review of federal appraisal standards and recommended reforms to prevent disparate impacts on the valuation of homes in communities of color and those owned by people of color. The bill would also create a grant program administered by the appraisal subcommittee to support a diverse pipeline of professional appraisers. In every city, major city represented on this committee, if the individuals live in an urban area, you know this issue quite well. And in a 2018 study by the Brookings Institute, they found that in the average metropolitan area, homes in neighborhoods where the share of the population is 50% Black are valued at roughly 1/2 the price as homes in neighborhoods with no Black residents. And the study goes on to report a finding that differences in home and neighborhood qualities do not fully explain disparities in property values. In March of 2020, as the COVID-19 pandemic hit the U.S., the Federal Reserve cut interest rates in response to signs of economic downturn. Homeowners fled to refinance their mortgages in historically low rates and save money on their housing costs. Yet, their report begins to show that Black homeowners face barriers in accessing those low rates due to alleged appraisal bias. In one case, this is absolutely something that we all ought to lock in on, the home of a mixed race family in a predominantly white neighborhood was valued at $330,000, 40% below the local average home price, and increased to $465,000 after the family removed racial signifiers from the home and received a second appraisal. Meanwhile, according to the most recent data from the Appraisal Institute, there are over 78,000 appraisers in the United States, with 85.4% identifying as white, 77.7% identify as male, and 70.8% being over the age of 51. This is not one of those solutions looking for a problem. This is a problem, a major problem that has been around far too long. And I think homeowners in the United States and all communities will fare better if this legislation is approved. Thank you, Madam Chair.
Is there further discussion on the amendment? If there's no further discussion on the
Madam Chair.
on the amendment to the amendment, all right. The gentleman from Ohio is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I certainly appreciate the work of the chairman of the subcommittee, Mr. Cleaver, to craft this bill. And I think we all agree there might be issues around this. Both he and I agree that homeownership, especially for first-time and first-generation homeowners, is critical to building wealth. And we agree that each and every person seeking to purchase a home or sell a home should have the opportunity to do so. The chairman's bill would create a task force on real estate valuation to harmonize underwriting standards and agency guidance and review diversity within the appraisal industry, including barriers to entry and creation of a grant program. Unfortunately, we haven't had an opportunity to have a hearing on this issue since June of 2019. I believe that there'd be great value in hearing from regulators, appraisers, and advocates alike on ways Congress can ensure best practices are followed and make sure that everybody's being served fairly. I think we all agree that this is an important issue. That's why I think it's important that we have a hearing on it. I think to rush it to a markup, this bill is pretty new, and we haven't had a chance to look at it. I believe we can work together to make it better. And I will pledge to you that folks from this side of the aisle will work to make it better. As you know, my time on the committee will soon come to an end, but I encourage my colleagues to use the chairman's bill as a starting point, but to work with stakeholders to develop solutions that work for everybody involved. I yield back the balance of my time.
Is there further discussion?
Madam Chair, may I strike the last word? Adams?
The gentlelady from North Carolina is recognized for 5
Thank you,
minutes.
Madam. Thank you, Madam Chair. I move to strike the last word. First, I want to thank my colleagues, Congressman Cleaver and Congressman Torres for introducing the legislation. Within the Black community, many homeowners know all too well about the bias that exists with the appraisal industry. I could even share some personal anecdotes of family members who were given far lower assessments on their homes in similar conditions compared to their white neighbors. And that's why this bill is critically important, and I'll help to and will help to combat a lot of the disparities in America's residential and commercial real estate appraisal. In order to better understand and to root out and to mitigate disparate outcomes, we've got to first study the issue, and then we can work towards solutions. So by establishing an interagency task force to review and remove barriers to equitable real estate valuation standards and providing federal grant funding to facilitate greater diversity and inclusion in the profession, I believe that we can take some real steps to ensure more equitable outcomes and ensure that homeowners are earning the full value of their homes. And so, Madam Chair, I urge my colleagues to support it, and I yield back.
Thank you. The gentleman from Wisconsin is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. While this amendment, I do believe, is well-intended, I think in the end, it's both duplicative and also has a risk of hurting those that it's intending to help. The appraisals are an important tool to help lenders, purchasers, and government programs understand the value of a property, factoring in market conditions. While housing finance and appraisal systems has had its flaws, I am concerned this bill goes too far and is based on a flawed premise. Appraisals are meant to reflect the actual price in the market. They do not set the price. This legislation seems to assume as fact that the property appraisals are currently highly biased and therefore prices are biased. And to remedy this assumed bias, the bill calls on federal officials to invent new flexible guidance for, quote, appraisals and any underwriting processes associated with appraisals, end quote, in certain neighborhoods. In other words, this would create different rules for some properties with the goal of raising their appraised values. My concern here is that this will confuse market participants and will create a situation where appraisals are generally less reliable, less impartial, and less fair. As we've discussed many times in this committee, attacking the mechanisms by which we price risk and estimate value doesn't change the underlying reality. Bills like these make the facts less clear, promoting market participants to take fewer risks and in the end raise prices and actually turn away from marginal borrowers. And so it's with this concern that I urge my colleagues to reject this approach. While this bill, I do believe, is well-intentioned, I'm very concerned it's going to actually end up hurting those it's intending to help. With that, I yield back.
Thank you. The gentleman from Michigan is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair, and let me piggyback a little bit on my colleague from Wisconsin's comments, and I appreciate this conversation. We need to have this conversation. I'm a former licensed realtor after I graduated from college, and my family has been involved in construction and developing, and that is a background that I still cherish. And there's a concept in real estate which is, and it cuts across all sectors, whether it's selling, mortgages, taxation for governments, and it's ad valorem or at value. And that's how property is supposed to be looked at. And I understand that that there may not be that equity. We also do need to explore what are some of those reasons for that inequity, such as school availability, access to various amenities. All those things affect the value. And while I highly commend my good friend from Missouri with this, These are problems that must be explored, but we have not done the exploration writ large. We have a bill in front of us that we haven't had a committee hearing on. We have not had any of those experts or folks that have been either affected positively or negatively within the marketplace. We have not had the kind of input that the severity and the significance of this issue warrant. And if we are serious about tackling this, rather than putting up the window dressing of virtue signaling, and I'm not saying my colleague is doing that at all. I do not question his motives at all. But the speed with which we are doing this does belie the question: why not take the time to properly explore these significant issues in housing? Because it's widespread, that has ramifications throughout banking, throughout the real estate industry, throughout the appraisal industry. And frankly, as I think has also been pointed out, a number of those things that have been discussed are illegal already if they are in fact happening. And that is a form of redlining that cannot and should not exist. So let's have that fulsome conversation to really get at this. And while I support the effort, I can't support this bill today because we have not done the work behind it to actually dig in and get to those issues and the root causes of those issues. And as I said, it's a number of things that affect value. Some of it is relative value of the properties around you. Some of that is the quality of the school. Some of that is the location of a grocery store. Some of those are access to transportation. Those types of things deeply affect and relatively affect the price of those properties. So while I commend my colleague, I'm not able to support the bill today, but hope that we are going to actually take a good faith effort in digging in and dealing with these issues. And with that, I yield back.
Thank you. The gentleman from Guam is recognized for 5 minutes to strike the last word.
Thank you so much, Madam Chairman, and thank you to the author of the legislation for moving this measure forward. I particularly wanted to recognize the gentleman for page 3, starting on line 19, adding a representative for each of the state appraiser regulatory agencies of Guam, Puerto Rico, the Virgin Islands, and the Commonwealth of the Northern Mariana Islands. The real estate valuation task force that's being created in this section will allow for us to be able to harmonize the underwriting standards and the appraisal standards, and it's just really good policy. You know, our territories are just not even included in the bigger picture of things, and you know, a lot of areas in America are just not included in the bigger picture of things. And that's the whole point of this legislation, is to make sure that communities that are oftentimes forgotten, demographics that are oftentimes forgotten, are not forgotten. And I think that it's just really good work. I would like to also recognize the author of the legislation seeking to provide support for historically Black colleges and universities. I would like to ask if perhaps we can include territorial universities in that as well, especially because territories such as Guam are just so far away. And if we can get help in being able to have more of our people properly trained in this greater harmony, that would be really, really good policy as well. With that, I would like to yield time to the gentleman, the author of the legislation, Mr. Cleaver, if he has any additional remarks on the legislation.
I'd like to Madam Chair, thank the gentleman from Guam, and also agree with everything he just said in terms of widening and making more inclusive this language. I don't have an argument with my colleagues on the other side about the discussion of something this significant, and that's why we are creating with this legislation a task force, and that's where the work will be done. That's the place where the discussions will take place. That's where we will evaluate and respond to the racial disparities in real estate valuations. And keep in mind that the people who've already endorsed this the creation of this task force includes just about every organization that deals with real estate and appraisals in the country. From
Will the gentleman yield? Will the gentleman yield?
I will yield.
It's a gentleman's time, but would the gentleman yield?
Actually, I would like to just reserve the yielding that I've done to Mr. Cleaver, as I will not be able to yield.
Well, what I'm trying to do, if the subtleties of legislating is, I'm trying to make an offer so we can fix these problems before the floor, and that's why I wanted to ask if you'd yield. We don't need to talk more if there's a goodwill offer to work before we get to the floor. That's what I'm suggesting. And since Mr. Cleaver's making a compelling case, my colleagues are interested in working something out, and since he's digitally here, I thought we could get on with that.
Be more than happy to
Mr.
yield
Cleaver's
to the gentleman,
interested.
Madam Chair.
Thank you very much. Would the gentleman yield?
Absolutely.
I support the changes the gentleman from Guam is describing, and would request that, again, as our ranking member is doing, request that he work with the sponsor of the bill to make those changes before we go to the floor, and I yield back.
Thank you, Madam Chair. I would also yield to the ranking member if he has additional comments that he wanted to make with respect to his earlier commentary.
I thank my colleague for yielding. I think there's goodwill on this, and I think Mr. Stivers and Mr. Heisinger are interested in having that engagement, and you may want to yield to them for those purposes. But if there's goodwill on this, then I don't think we need to record a vote, and we can try to work those things out before we go to the floor. And maybe this is a suspension candidate if we can get those things worked out.
I thought he did.
But maybe perhaps Mr. Stivers and Mr. Heisinger wants to chime in.
I'll continue to yield my time to Mr. Stivers, if he'd like to.
I'd like to thank the gentleman for yielding. I'd like to thank the sponsor for his efforts on this, and I just would like to engage in a quick colloquy with the sponsor, Mr. Cleaver, and see if he is willing to work with us in good faith on a few issues as we move to the floor.
If I'm in order,
I yield.
thank you. Obviously, I would want to sit down and work out any issues because we, the task force will be working on bringing some kind of research and from all of these parts of the industry. So I would be happy to work with the ranking members, whomever he would suggest, or Mr. Stivers or Mr. Heisinger. I think that's a way for us to do this and still get this valuable task force established.
Thank you. I just ask if the sponsor would work with both Mr. Heisinger and I, since I am officially what is called a short timer at this point. And I yield back to the gentleman from Guam.
Appreciate the gentleman's colloquy. I would like to ask if the author of the legislation has any further commentary, and if not, I will yield back.
I'm ready. Thank you very much, Mr. San Nicolas. I am ready to work with individuals from the other side to talk through this legislation. I will say that if we don't have to make any dramatic alterations, then I'm wide open for discussions.
Thank you, Madam Chair. I yield back.
Thank you very much. Is there further discussion of an amendment to HR 2553? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye.
Aye.
Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment to the nature of a substitute is agreed to. The question now occurs on ordering HR 2553 as amended to be reported favorably to the House. All those in favor say aye. Aye.
Aye.
Opposed, no. In the opinion of the chair, the ayes have it. The ayes have it, and HR 2553 is agreed to. Pursuant to notice, the chair now calls up HR 2547, the Comprehensive Debt Collection Improvement Act. The clerk will report the bill.
HR 2547, to expand and enhance consumers, students, service member, and small business protections with respect to debt collection practices and for other purposes. be it enacted by the Senate and House of Representatives of the United States of America and Congress assembled. Section 1, short title, Table of Contents.
Without objection, the first reading of H.R. 2547 is dispensed with. I have an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 2547, offered by Ms. Waters of California. Strike all after the enacting clause and insert the following.
Without objection, the amendment.
Madam Chair, I object to the A&S being considered as base text for purposes of further amendment.
The objection is heard. The amendment in the nature of a substitute will not be treated as base text and will instead be treated as a first-degree amendment. I now recognize myself for 5 minutes on the bill and the amendment. Consumers and their families struggling with debt, be it medical debt, debt from a student loan, or any other debt, are left with the difficult decision of deciding which debt they must pay off to survive during the COVID-19 pandemic. As they make these difficult decisions, far too many debt collectors engage in inappropriate and abusive tactics to collect. While there are some protections afforded consumers under the Fair Debt Collection Practices Act, that law was enacted in 1977, and it is time for Congress to enhance and expand the law's protections to better protect borrowers. Over the years, including in 2020, consumer complaints about debt collection practices have consistently been among the highest volume of complaints that the Consumer Financial Protection Bureau receives, with a top concern involving consumers reporting being contacted too often by debt collectors. At a full committee hearing in September 2019 and in a subcommittee hearing last month, we heard testimony about the harmful impact of predatory debt collection practices and its negative impact on various groups. This includes taxicab medallion operators and other small businesses who are struggling to stay afloat in this pandemic, service members providing our country, students and others facing health hardships, low-income households, and others struggling to pay their bills during this time. The Comprehensive Debt Collection Improvement Act addresses these problems by curbing predatory and deceptive actions against consumers. This bill limits predatory confession of judgment agreements that harm small business owners, prevents threats against service members and their military careers, and creates needed protections for private student loan holders facing permanent disability. The bill prevents an unlimited flood of debt collection emails and text messages being sent to consumers. It also expands the law's protections to debts owed to federal agencies, state and local governments, as well as covers foreclosures in non-judicial states. While many Americans have struggled or lost their job during the pandemic, some debt collection companies are seeing record profits. As the courts reopen and various payment moratoriums come to an end, Congress must ensure that families struggling to stay afloat in this projected K-shaped recovery are not taken advantage of by predatory debt collectors. I'd like to thank Representatives Velasquez, Meeks, Cleaver, Presley, Dean, Tlaib, and Auchincloss for their contributions to this package and their leadership on these important reforms that will provide relief to many consumers in desperate need of it. If there is further discussion of or amendment to the amendment in the nature of a substitute.
Madam Chair, I have an amendment at the desk. Madam Chair?
Yes.
I have an amendment at the desk.
Our ranking member has an amendment at the desk. We will pause to allow the copies of the amendment to be distributed electronically. Again, have all members received the amendment? If so, I would like to reserve a point of order on this amendment. The clerk will report.
Amendment to the amendment in the nature of substitute to HR 2547 offered by Mr. McHenry. Strike all after the enacting clause and insert the following.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes to explain his amendment.
Well, thank you, Madam Chair. My amendment would replace the underlying bill with several targeted approaches to improve the debt collection and credit reporting framework. First, my amendment would require the inclusion of a clear disclosure when a confession of judgment, or COJ, is part of a business lending contract. It would also require lenders to obtain a written affidavit containing the date and nature of a borrower's default in order to execute a confession of judgment. This will help to ensure small businesses know the full terms and conditions of their agreement and help to crack down on the misuse of COJs that have been reported while allowing these important repayment tools to remain in use. Instead of banning a fallback provision that ensures the ability to collect debt, we should work on in a bipartisan fashion to improve transparency and foster a more transparent and responsible credit-based economy. My amendment preserves Ms. Dean's service member protection bill. Ms. Representative Dean worked with committee Republicans in the past Congress to ensure the language did not hide any service members' vulnerabilities from their commanding officers. This change eliminated any concerns for readiness and capability of troops. We debated that bill on the House floor last night, and I think it should pass with bipartisan support on the House floor. My amendment would also allow the estate of a deceased or permanently disabled student loan borrower to request a discharge of the student loan debt. This change would codify the current practice used by private lenders to ensure student loan borrowers are protected. My amendment would also address concerns with credit reporting practices such as working toward a transition away from Social Security numbers as verification, prohibiting the inclusion of paid, medically necessary, non-elective medical debt, removing adverse information from credit reports if a court of competent jurisdiction has determined that the consumer is a victim of either 1, private education loan fraud, 2, financial abuse, 3, unlawful mortgage lending, or 4, human trafficking. Directing the GAO, and further, it directs the GAO to study and report to Congress on the use of non-traditional data in credit scoring. There's bipartisan support for that on this committee. This amendment is a common sense attempt to ensure our financial system remains safe and sound while protecting and introducing options for consumers. I think this is a thoughtful bipartisan approach that we all can come to terms with. I think this is a piece of legislation that could make its way into law because it has wide bipartisan support. I'd encourage my colleagues to support this amendment and make what will be a partisan bill a now bipartisan bill. And so I'd urge its adoption, and I yield back the balance of my time.
Thank you. Is there further debate on the amendment?
Madam Chair, I strike the last word.
The gentlewoman from Michigan is recognized for 5 minutes.
Thank you, Madam Chair. Thank you so much for your consideration of HR 2547. In regards to McHenry's amendment, I really would hope that my colleagues would try to work with us prior to this. This has been a reintroduction of the bill from last term. And we know from the number of committee hearings we've had in the past that, consumer credit can determine a person's ability to own a home, the rate of auto insurance, and access to employment opportunities. And so we want to make sure that consumers are protected, absolutely. But one of the things to realize in regards to this bill specifically is that close to 60% of the calls that CFPB gets right now is regarding medically related debt. For far too long, we hear about sudden health crises, emergency room visits, has met years of being denied access to opportunities to thrive because of how we treat medically necessary debt on credit reports. And that needs to change. We also know that 59% of the bankruptcies across our country is due to medical debt caused by irreparable harm to families who just wanted access to medical services that they desperately needed. And Madam Chair, we should not choose to get sick. I mean, none of us choose to get sick. So electing to undergo a medically necessary procedure has no bearing on whether someone is living within their means, and it has no place on our credit report. And finally, you know, it would also prohibit credit agencies from reporting other medical collections within until 360 days after delinquency. And this is important. We hear more and more from our residents, I know I do, about folks that get medically necessary debt and are working with their insurance companies. And in the meantime, it gets into collections. And then guess what? They end up getting a resolution, but are not given enough time. And so CFPB has found that medical pricing, billing, reimbursement processes lacks transparency and is prone to consumer confusion, which leads to a lot of, again, this debt getting on consumer reports. And this can result in consumers delaying or withholding payments until they can clear those issues. This extension would give consumers more time to clarify and again, resolve a number of disputes that they have. And all of us, including members of the United States Congress, know what it is, how it means, or the experience of dealing with health insurance companies across our country. Even prior to COVID, Madam Chair, medical debt was the most common type of past due bill for many of our residents. And now the medical bill for hundreds of thousands of Americans are coming now. You know, the side effects to COVID, the number of things that are happening, hospitalization due to COVID. We need to address this debt and its impact on credit, consumer credit, and it is urgent that we move quickly on this. So I hope my colleagues would support, as is the Comprehensive Debt Collection Improvement Act. It really truly arms consumers that owe medical debt with more robust protections and safeguards. And again, I can't thank you enough, Chairwoman, for your leadership on this and really truly listening to the many communities across the country who have said, please help us deal with medically necessary debt. And again, I hope my colleagues would support this bill today. Thank you, and I yield.
Thank you. The gentleman from Missouri is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair, and I do strike the last word. The underlying bill is a collection of 8 pieces of legislation. While not every partisan provision, while not every provision of this bill is problematic, this legislation in totality is a partisan, misguided attempt to severely disrupt the debt collection and credit reporting industry and the businesses they serve. Instead of working with Republicans on common sense reforms to the debt collection and credit reporting regime, Committee Democrats are insistent on pushing for radical policies that will only harm consumers and businesses. One example, one provision of this bill seeks to address the reporting of medical information on credit reports. Instead of a measured approach that would help individuals with debt from medically necessary procedures, this bill completely prohibits the addition of any debt from a medically necessary procedure on a credit report. In the ranking member's amendment, there is a provision to exclude debt from medically necessary services from a credit score once it is repaid. This is the sort of provision that could actually help consumers because it would garner bipartisan support and have a chance of getting passed into law. Despite a bipartisan desire to aid consumers with medical debt, this bill makes no attempt at real reforms to medical debt reporting. This legislation also includes a provision to completely ban confessions of judgment in any commercial lending contract. A confession of judgment is a written agreement between a borrower and a lender where if the borrower should default, the lender can seek a judgment to obtain funds outside of litigation. While certain actors have misused confessions of judgment in the past, they're a legitimate tool that can help resolve or avoid litigation, facilitate commercial transactions, and can even be used by the federal government to recover funds on behalf of victims. Instead of a carpet ban on all confessions of judgment, which only benefits trial lawyers at the expense of consumers, the ranking member's amendment would provide for clear disclosures if a confession of judgment is part of a business lending contract. Again, another bipartisan solution to an issue brought before this committee. The ranking member's amendment has other common sense provisions to improve the transparency and effectiveness of credit reporting and debt collection. It represents an actual attempt at legislating because it contains simple bipartisan solution. What I find most troubling about this legislation is the ongoing trend from the majority to eliminate all types of consumer information from credit reports and prevent the collection of debt in this country. Lenders rely on accurate credit reports to appropriately provide credit to consumers. this information is incomplete or does not provide an accurate picture of creditworthiness, lenders are forced to raise rates to ensure they can absorb the potential losses. And receiving payment for services rendered is a fundamental premise of our economy. Limiting the ability to collect debts will only harm businesses that have provided these services, again, causing them to stop business with people with less than excellent credit. In closing, I appreciate the ranking member for proposing this amendment with many common sense solutions that should be adopted on a bipartisan basis. However, we continue to see politics trump policy in this committee, and the American consumers are the people losing out. With that, I urge my colleagues to support the amendment, and I yield back.
Madam Chair.
Thank you. The gentlewoman from New York is recognized for 5 minutes to strike the last word.
Thank you, Chairwoman Waters. I rise in opposition to the ranking member's amendment. I am hearing from the ranking member offering the amendment that the inclusion of an affidavit will crack down on the misuse of confession of judgments. However, I will remind the gentleman that prior to change in state law in New York, the lender needed to also file an affidavit executed by the borrower for the confession of judgment to be executed by the court, and the Bloomberg Business Week expose described how the confession of judgment process was still subject to rampant abuse. I introduced this bill in the 115 Congress and the 115 and the 116 Congresses. I held a hearing on the use of confession of judgments in the Small Business Committee, and this bill has been part of several hearings we have held in this committee, most recently in March. In that time, no one has presented me with any concrete examples of or any evidence on how confession of judgments are used for a legitimate purpose in the small business lending context that benefits the borrower. The goal I am trying to accomplish is to eliminate the use of confession of judgments in commercial contracts, which an affidavit does not accomplish. I believe that the use of a confession of judgment against a small business borrower during the current pandemic is especially egregious as small businesses around the country continue to confront the myriad of economic challenges posed by our current times. Many legal scholars have criticized confession of judgment clauses as a violation of the due process right of notice and opportunity to be heard. This is true now more than ever, when many courthouses have stopped most of their operations or implemented social distancing measures to keep people safe. Borrowers cannot even come down to the court to present their side because of the social distancing provisions. We already held hearings in this committee where we learned some debt collection companies are seeing record profits in this pandemic and forcing consumers and small business owners to choose between making essential purchase and settling debts, and collection suits can have a long-lasting negative consequences for small business owners. For all those reasons, I urge my colleagues to reject this amendment. Thank you, and I yield back.
Thank you. Is there further debate on the amendment? The gentleman from Massachusetts is recognized for 5 minutes to strike the last word.
Chairwoman, I strike the last word. The COVID-19 pandemic has taken hundreds of thousands of lives and increased the medical bills.
Can't hear.
It's on.
If you can speak directly into the...
It has taken hundreds of thousands of lives and increased the medical bills of many more families struggling financially. Further, workers with decreased wages are struggling to keep up with bills and rent payments. Congress passed the American Rescue Plan in a tremendous investment to support workers behind on bills. We now need to ensure that consumers are protected from bad faith debt collectors. Chairwoman Waters' debt collection package, the Comprehensive Debt Collection Improvement Act, does just that. It is a comprehensive measure to expand consumer protections at a time when everyday people are struggling. My bill, the Non-Judicial Foreclosure Debt Collection Clarification Act, is included in the Comprehensive Debt Collection Improvement Act. This bill closes the gap in the Fair Debt Collection Practices Act so that homeowners facing non-judicial foreclosure proceedings are protected under the FDCPA. The FDCPA sets standards for the way that third-party debt collectors interact with consumers. This can include ensuring that debt collectors are validating the amount of a debt and are not sharing debt information with the consumer's employer. It also makes it illegal for debt collectors to harass consumers. These protections should not be limited to foreclosure proceedings that take place in a courtroom. Given that my home state of Massachusetts allows non-judicial foreclosure proceedings, this legislation will protect my constituents against predatory debt collection practices. This bill also includes other necessary consumer protection measures, like Congresswoman Dean's Fair Debt Collection Practices for Service Members Act, which would prohibit debt collectors from threatening a service member's rank to collect a debt. Congresswoman Presley's bill, the Ending Debt Collection Harassment Act, which would prohibit debt collectors from contacting consumers electronically without their consent. We cannot rebuild an economy that works for everyone without protecting consumers. Making sure borrowers are treated with dignity and protected from harassment is an important step to ensuring economic fairness moving forward. I'm proud to support HR 2547, and I urge my colleagues to do the same. Madam Chairwoman, I yield back.
Thank you. The gentleman from Ohio is recognized for 5 minutes to strike the last word.
Thanks, Madam Chairwoman. I think it's unfortunate with this approach that we're moving bills together in a big bundle dealing with debt collection. And frankly, I was encouraged earlier this year to see the suspension that a bill, Congresswoman Dean led, and I was happy to co-sponsor, called the Fair Debt Collection Practices for Service Members Act. I mean, this is a good bill. It essentially prevents our military from being distracted, essentially turned into debt collectors by private sector folks. It lets our military focus on fighting and winning our nation's wars rather than collecting debts for creditors. It's a great bill. I hope we can move it as a standalone product through suspension. But then when you put the rest of these things into these big bills, I'm going to have to vote against the underlying, while I support this underlying piece that's part of it, I'm going to have to vote for against the bigger package. And the bigger package does things that truly do harm, A, to consumers, but B, to the whole ability of the marketplace to work. I get that, my Democratic colleagues would like to have free medical care for everyone. But the idea that you can do it by simply refusing to report on your failure to pay or being able to, it really collapses our whole system and the whole premise of individual accountability and responsibility. I agree, no one should go bankrupt because they get sick. We're increasingly blocked from collaboration on bills that would be substantive, particularly with healthcare. And I suspect personally that it's because the more the current system breaks, the more the allure of the only thing that our colleagues think about is how to get Medicare for all. So there isn't a will to actually make the current system better. There's only a desire to see it continue to fail so that you can implement Medicare for all. I think it's a shame. There are a lot of people that are being hurt in the process, and they're going to be hurt even worse if you collapse the payment system by making it so no one's accountable for actually paying their debt. And so what comes in the process? Good bills that hopefully can make it through on their own accord, like the Fair Debt Collection Practices for Service Members. I'm happy to cooperate with Democratic colleagues on abusive practices that protect our consumers. I'm happy to cooperate. Of course, it's outside the scope of this committee on ways to make the current healthcare system better for people. But this is the wrong way to do it. It's going to cause more harm than good. And it's all in the name of debt collection to pursue a different objective. And with that, I yield back.
Thank you. I recognize myself for 5 minutes. I oppose this amendment. This is a substitute amendment that we just received. And while there are some provisions from HR 2547 included in the amendment, it cuts many others, and we have had less than 10 minutes to review. Unfortunately, the amendment strikes many essential consumer protections from the underlying bill relating to consumer health in a global pandemic. Consumers facing foreclosure in non-judicial states, FDCPA protections for federal and state-held debt, and protections from abusive debt collection practices. The committee has heard testimony on from a range of experts and consumer advocates on these issues, and this amendment strikes needed legislative changes. Mr. McHenry's amendment would allow debt collectors to send unlimited electronic communications, including via text, without consumers' affirmative consent. Debt collectors have been making record profits during the pandemic, while consumers have been suffering, and we should ensure that they are fully protected. HR 2547 is supported by civil rights and consumer rights groups, including Americans for Financial Reform, Center for Responsible Lending, Consumer Federation of America, National Association of Consumer Advocates, National Consumer Law Center, on behalf of low-income clients, and USPIRG. During this COVID-19 pandemic, HR 2547 is needed now more than ever. For these reasons, I urge all members to vote no on this amendment. The gentlewoman from Massachusetts is recognized for 5 minutes to strike the last word. The gentlewoman.
Yes, Madam Chair. Yes, I move to strike the last word. In 2020, the CFPB received 82,700 complaints about debt collection, up 10% from 2019. In 2018, the Federal Trade Commission received over 483,000 complaints. Collectors themselves estimate they contact consumers over 1 billion times a year. A 2017 survey of debt collection organizations found that 1 in 4 frontline staff had reported having spoken to at least one customer in the past year who seemed serious about committing suicide. The provisions in this bill that would end debt collection harassment reaffirm necessary protections and place control firmly back in the hands of the consumers. Consumers are free to opt in and out of electronic communication with their collector, but collectors cannot take it upon themselves to bombard consumers with unlimited texts or emails. This is a damaging and misguided amendment. Collectors themselves, again, estimate they contact consumers over 1 billion times a year. I urge my colleagues to oppose this amendment, and I yield back.
Thank you. Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Those opposed,
Aye.
no.
No.
Oh, no.
Madam Chair,
Madam Chair. Oh,
Who seeks recognition?
gentleman from Missouri.
Gentleman is
Request
recognized.
request to record a vote.
Request for a recorded vote?
Yes.
All right, if a recorded vote has been requested, all in favor of a recorded vote should raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. And I withdraw my point of order. And if there's no further amendments, without objection, the previous question is ordered on HR 2547, and pursuant to Section C5 of Committee Rule 3, further proceedings on the pending amendments are postponed.
I seek recognition. Madeline Dean.
The gentlelady is recognized. Is she on this? The gentlelady requesting recognition on the vote that we just had? We will move. Thank you.
So the amendment,
Pursuant to notice The chair now calls up H.R. 2543, the Federal Reserve Racial and Economic Equity Act. The clerk will report the bill.
H.R. 2543, to amend the Federal Reserve Act to add additional demographic reporting requirements, to modify the goals of the Federal Reserve System and for other purposes. Be it enacted by the Senate and House of Representatives of the United States of America and Congress assembled. Section 1, short title.
Without objection, the first reading of H.R. 2543 is dispensed with. I have an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais.
What
The clerk will
happened?
read the amendment.
We did, so McHenry offered a substitute amendment. There was debate on the amendment. They voice voted.
We finished the debate. I'm sorry, this is a new bill. There is no, there's no amendment on the debate.
You moved the previous question. So we're done. We're on the new bill. You just called up a new.
We did conclude the debate and we rolled the vote. So we'll move on to the next bill. Thank you. Without objection, the first reading of 2543 is dispensed with. So I'll go back. I have an amendment in the nature of a substitute, copies of which have been distributed in advance to all the members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 2543 offered by Ms. Waters of California. Strike all after the enacting clause and insert the following. Section 1, short title.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize myself for 5 minutes on the bill and the amendment. The past year has served as a painful reminder of the glaring racial and economic inequality that affects our economy. Low-wage workers and communities of color have suffered disproportionate public health and economic impacts from COVID-19 pandemic. When the worst jobs report in recorded history was released last April, it showed that Black unemployment had climbed all the way to 16.7% and was nearly 17% for Black women. Even as the economy began to recover, the recovery was not felt evenly. Analysis from 1 year after the pandemic shows that 500,000 Black women have left the workforce since January 2020. Unfortunately, we know that these trends are not new. Across education levels and by virtually any metric, enormous economic disparities have persisted. While the economy is booming or in recession, a study from 2016 found that, and I quote, the Black unemployment rate is nearly or more than twice the white unemployment rate, regardless of educational attainment, unquote. A true full employment economy will be one that eradicates this labor market discrimination. Recognizing this essential truth, tasking the Federal Reserve with a full employment mission was a key demand of the civil rights movement in the 1960s, including the March on Washington, which was officially titled the March on Washington for Jobs and Freedom. Coretta Scott King stood behind President Carter when he signed the Humphrey-Hawkins Full Employment Act into law in 1978. Despite the importance of this achievement, the Federal Reserve has never fully realized the full employment objective because the Black unemployment rate has continued to run above white unemployment rate as a 2-to-1 ratio. As Janelle Jones, now the chief economist at the Department of Labor, and Jared Bernstein, now a member of President Biden's Council of Economic Advisors, revealed in a study published last year, ever since Congress gave the Fed a full employment mandate in 1978, the Fed has sometimes declared victory and raised interest rates when the overall unemployment rate has periodically reach the Fed's estimate of full employment. But the Black unemployment rate has never once been low enough to fall under the level that the Fed considers full employment. Over the past year, as the pandemic has further exposed the racial inequities in our economy and the calls for racial justice have grown, officials at the Federal Reserve have acknowledged that they have a role to play. In a powerful essay published shortly after the murder of George Floyd, Atlanta Federal Reserve Bank President Raphael Bostic wrote, and I quote, "The Federal Reserve more generally can play an important role in helping to reduce racial inequities and bring about a more inclusive economy," unquote. My bill requires the Fed to formally recognize that role and to do everything within its power to reduce and ultimately eliminate the racial economic disparities that have plagued our economy for far too long, whether through its conduct of monetary policy, its oversight of the payment systems, the review of the impact that big bank mergers have in making the lending environment more concentrated in communities of color, its implementation of the Community Reinvestment Act, and so much more. The Federal Reserve plays a critical role in managing our economy, and minimizing racial inequality must be a part of that mission. So I would urge all members to support this bill. Is there further discussion of or amendments to the amendment in the nature of a substitute? For what purpose does the gentleman from Kentucky seek recognition?
Madam Chair, I move to strike the last word.
We will pause to allow copies of the amendment to be distributed electronically.
I have an amendment at the desk. Thank you.
Have all members received the amendment? Not yet? Thank you.
You need to probably send it again as well. Turn off their house public.
Have all members received the amendment? If so, I would like to reserve a point of order on this amendment. The clerk will report.
Amendment to the amendment in the nature of a substitute to HR 2543, offered by Mr. Barr of Kentucky. Page 1, strike lines 4 and 5.
Without objection, the amendment will be considered read. The gentleman is recognized for 5 minutes to explain his amendment.
Thank you, Madam Chair. This amendment is straightforward. I see the clock is not reset. Okay. This amendment, Madam Chair, is straightforward. The amendment reaffirms the independence of the Federal Reserve and supports the dual mandate of price stability and maximum sustainable employment, long settled the twin goals and responsibilities of the Fed. Congress structured an independent Federal Reserve to ensure that its monetary policy decisions focus on achieving long-run goals that would not become subject to political pressures that could lead to undesirable outcomes, even if those undesirable outcomes are unintended. The Fed should remain independent and not subject to political pressures from Congress or other outside sources, nor should the Fed veer into policy matters reserved for political branches, the executive branch, Congress, and clearly outside of the Fed's dual mandate. In recent years, we have seen growing pressure exerted on the Fed to stray outside of its mandate for political purposes, to accomplish social goals, or otherwise do the bidding of the vocal woke left. Many want the Fed to be a change agent for environmental policy, or to limit lending to unfavorable, unfashionable, or politically incorrect industries in their eyes. Those are definitively not the responsibility of the Fed. Solving economic inequality, racial inequality, those are very important policy issues, very important. But the Fed should not have its decisions dictated by Congress. This would invite the very political interference the Fed says it doesn't want, and that Congress took care to avoid in the crafting of the Federal Reserve Act to begin with. Blurring the lines between fiscal and monetary policy threatens both Congress and the Fed. These economic equality issues are clearly within the realm of fiscal policy and should be subject to the transparency and accountability of the political process within Congress, not the opaque, unaccountable, and independent processes within the Federal Reserve. Madam Chair, I would submit that if economic inequality policy matters can be delegated to the Fed, then all economic policy can be delegated to the Fed. And I would submit that those members on this committee who have strong views on solving some of these economic inequality issues, why would you want to delegate that responsibility, important responsibility, or that policy debate to an unaccountable independent Federal Reserve when, in fact, that is your responsibility as a member of Congress, as a policymaker, accountable to the American people? Why would you want to delegate that important job of addressing the issue of economic inequality to an unaccountable, unelected Federal Reserve? And finally, Madam Speaker, let me just make a final point, and that is that the bill itself, this legislation itself, concedes that the Fed does not have the authority to do this under existing law. And at least on that level, maybe we are in agreement. I think this bill speaks very, very loudly that the majority party and the author of the legislation, the Chairwoman, acknowledges that the Fed has limited authorities to address this issue. That's the way it should be. We, as members of Congress, have the responsibility to address these issues of economic inequality, not the Federal Reserve. And so, in summary, solving economic inequality is important, but the Fed should not have its decisions dictated by Congress. I urge my colleagues to support this amendment, and I yield back.
The gentlewoman from Missouri is recognized for 5 minutes to strike the last word.
I move to strike the last word. Madam Chairwoman, I'd like to speak in support of the gentleman from Kentucky's amendment and in opposition to the underlying bill. Congress established maximum employment and stable prices as a key macroeconomic objectives for the Federal Reserve in its conduct of monetary policy. Congress also structured the Federal Reserve to ensure that its monetary policy decisions focus on achieving these long-term and long-run goals and would not become subject to political pressures that could lead to undesirable economic outcomes. This legislation directly violates the independence of the Federal Reserve Board of Governors by directing the Board of Governors to change its dual mandate and independent process. Without proper autonomy, the Federal Reserve would be further influenced by politics with respect to laws influencing the decisions of our central bank and financial system. An independent Federal Reserve without actions dictated by Congress can better address long-term economic objectives. During his multiple appearances before the committee this year, Chair Powell has said that the Federal Reserve would work to ensure economic, racial, and ethnic disparities and inequalities when they're part of the monetary policy process. However, Congress has the sole ability to enact fiscal policy and is better positioned to address disparities in employment income, wealth, and access to affordable credit, not the Federal Reserve. As the ranking member has said before, there is clear distinction between what is fiscal policy and within the purview of Congress and what is monetary policy and within the purview of the Fed. This legislation threatens the independence of the Federal Reserve and puts its dual mandate of achieving maximum employment and price stability at risk. I support the gentleman's amendment, but I urge my colleagues to oppose the underlying bill, and I yield back.
Thank you. The gentlewoman from Ohio is recognized for 5 minutes to strike the last word. Is Ms. Beatty on the platform?
Thank you, Madam
You're
Chair.
now recognized.
Move to strike the last words. I want to first say thank you so much for HR 2543. Many of us have a long history of knowing the relationship of the Federal Reserve, and certainly remember prior to Raphael Bostic being the only person of color to serve as a Federal Reserve president out of Atlanta, Georgia. That happened at the same time we were pushing forward with the Federal Reserve to make sure that we were looking at the change that we need. And this is the right time for us to entertain this piece of legislation because it would expand the Federal Reserve's reporting requirement and modify the goals of the Federal Reserve System to achieve racial and economical equity in America. I don't think there's a Democrat or a Republican sitting in this committee that would deny the fact that we know we have conscious and unconscious bias, that we have systemic racism. And we would also know that the only way we can move forward is to, in the way the folks say it in my district, call it out and show it. And that's what this is doing. So many of my colleagues on the other side in opening statements have talked about we need bipartisanship. We need to come together. Well, let me just say, when we started talking about the same endeavor with the Federal Reserve through the Beatty rule, this extends on it and gets us to where we should be overall. Let me just tell you, not one Republican signed on, not just two Republicans signed on. Republicans signed on to making sure that we would do this with the Federal Reserve. And on the United States House floor, it passed unanimously. So what I'm saying, if you really look at where we are right now, if you look at the actual language and what this piece of legislation is asking for, it will help us close the systemic barriers that disadvantage diverse communities for generations. And we all have some diversity in our districts and in our communities. This isn't Congresswoman Maxine Waters saying this. She is saying what data and statistics and facts and Black and white leaders have said, that this is what the nation is facing, and this is why we are doing this by explicitly requiring the Federal Reserve System to address inequities in employment, in income, in wealth, in access to credit through its supervision of monetary policy and the supervision of the bank. So with that, I am asking us to join together to help us advance the lives of so many who have been marginalized, who have been discriminated against. And with that, I yield back, Madam Chair.
Thank you. The gentleman from Ohio is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I move to strike the last word. And just to follow up quickly with my friend, Congresswoman Beatty, as she knows, I was proud to be one of the first Republicans to support the Beatty rule last Congress. I think it's good practice. It helps us achieve more diverse perspectives inside the Federal Reserve, which I think is important and a noble mission. But with respect to this bill, I support my colleague from Kentucky and disagree with the underlying bill. And let me start by saying that as a Congress, we absolutely need to do a better job of creating more opportunities for Americans of all backgrounds. I mean, it is objectively true that too many minority communities have not benefited fully from our economy and have not had the same opportunities to achieve the American dream. I've seen it with my own friends and some members of my family. It's important that Congress comes together to think critically about how we can be doing more to help disadvantaged communities. Unfortunately, this does take the wrong approach because this is fundamentally a question of who is best suited to solve these issues, who's best suited to be responsible in this space, and that job is clearly Congress's. And this is clearly the realm of fiscal policy. It is certainly not the realm of monetary policy. And we've actually had Chairman Powell in this committee since I've been elected, I don't know how many times, probably 10 at this point. And invariably in every hearing, somebody will ask him, what do you think about your dual mandate? Do you think that's the right mandate? Should anything be added or subtracted from the mandate? And every single time he answers the exact same way, which is the dual mandate is the appropriate way for the Federal Reserve to fulfill its role in our society and to manage its affairs. And, you know, I think the Federal Reserve, frankly, has, under his leadership throughout this pandemic, has shown that that mandate, those two mandates are exactly right for what we need. Is it always perfect? No. There are tons of things that have happened and continue to happen with respect to Fed decisions that I may not agree with in full. But I think over the long course of the Fed's history and the history of the dual mandate, we've seen that that's the appropriate place for the Fed to be focused. And so while we all agree, or I certainly agree, that we need to do a better job for our minority communities all across the country, and that the work is nowhere near complete on that, I urge my colleagues to reject this bill and to focus on fiscal policy and the role of Congress. It is Congress's job, those of us sitting in these chairs, so entrusted by the people to work on the problems of the country, it is our job to fix this. And so I urge opposition to the bill, but I say that looking forward to continuing to work with my colleagues on both sides of the aisle to advance policies to help minority communities, to make sure that every American has a chance to live the American dream and to participate fully in the American economy. There's tons of work to be done. I will do it with anybody who has a sincere heart in achieving it, but this is the wrong approach, and I yield back.
Thank you. Is there further debate? I recognize myself for 5 minutes. I oppose the substitute amendment offered by Mr. I'm sorry, who seeks recognition?
From Texas, I have my hand raised, I believe.
I'm sorry, I did not see that. You are recognized for 5 minutes.
My apologies, Madam Chair. but I didn't want to interrupt you, but I do think it important to note something significant about your proposal. The contention with this amendment is that it would change the dual mandate of the Fed. And of course, this is not the case. I will read directly from your legislation. This is on the section that is Section 2, duty to minimize and eliminate racial disparities. And I will go down to line 7. It reads, the Board of Governors of the Federal Reserve System and the Federal Open Market Committee shall exercise all duties and functions. This is the operative phrase, exercise all duties and functions. Doesn't change the duties and functions of the Fed, doesn't require the Fed to somehow conclude that their duties and functions are something other than the mandate that we've accorded the Fed, but it simply says that as you do this, do it in a manner that fosters elimination of disparities across racial and ethnic groups with respect to employment, income, wealth, and access to affordable credit, including actions in carrying out monetary policy. And it goes on to explain some additional things related to policy. Point is, the chairwoman has judiciously concluded that the Fed can maintain its dual mandate, do its job efficaciously, and also, as you're doing it, if you see opportunities to do something about the disparities in exercising the mandates, then do so. I think that this is an appropriate way for us to engage the Fed in this process. I am grateful that it's being done now, and I regret that we didn't do this sooner. These disparities cannot continue because if they continue, all they do is widen the chasm, not only between people economically, but also in other areas of life. At some point, we have to deal with the disparities. Madam Chair, I again apologize for the interruption, and I yield back the balance of my time.
Thank you. Is there further debate on the amendment? I now recognize myself for 5 minutes. I oppose this substitute amendment offered by Mr. Barr of Kentucky because it ignores the important ways the Federal Reserve can do its part to address systemic racism, including by reviewing how its own practices have contributed to systemic racism. First, it is also important to remember that the Federal Reserve was created by Congress and has been reformed by Congress. Let me clarify that nothing in my bill would change or undermine the Federal Reserve's operational independence to conduct monetary policy whatsoever. Unlike Republican proposals to subject the Fed to a job-killing Taylor rule in the past, my bill does not establish any kind of numerical target or rules-based process for the Fed as it sets monetary policy or carries out any of its other powers. Further, my bill gives the Fed a duty to reduce and eliminate racial economic disparities to the greatest extent possible, balancing its price stability and maximum employment mandates in doing so, as it always does. Communities of color should no longer be consigned to a permanently slack labor market where the Black unemployment rate is elevated at a 2-to-1 ratio, even when accounting for education and so-called skills gap factors. One 2016 study found that Black male workers with college degrees were at an 18% disadvantage compared to white workers at the same education level, and that relative to the average hourly wages of white men with the same education, experience, metro status, and region of residence, Black men made 22% less, and Black women made 34.2% less. This is unconscionable. A true full employment economy will be one that eradicates labor market discrimination. It can only be achieved once racial economic disparities are declining dramatically and eventually eliminated. Merely recognizing this economic reality does not tie of the Fed in any way, nor does it commit the Fed to disseminating any unrelated views on social, economic, or political issues of the day. Indeed, last year, Atlanta Fed President Raphael Bostic acknowledged that the Fed has a role to play in addressing racial economic inequality, and Chair Powell echoed Bostic's sentiment. We are at an important inflection point in history, and Congress and the Federal Reserve must take advantage of the opportunity to ensure that the American dream is available to everyone. For these reasons, I would urge all members to vote no on the Barr Amendment, which seeks to enshrine the status quo. I yield back. Is there any further discussion on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. Those opposed, no. No. In the opinion of the chair, the noes have it. Mr. Barr, you're recognized. A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute? If there is no further amendment without objection, the previous question is ordered on HR 2543 and pursuant to Section C5 of Commitment Rule 3, further proceedings on the pending amendments are postponed. Pursuant to notice, the chair now calls up HR 2516, the Promoting Diversity and Inclusion in Banking Act of 2021. The clerk will report the bill.
HR 2516, a bill to amend the Dodd-Frank Wall Street Reform and Consumer Protection Act to require
Madam Chair, I ask
federal
that the
banking.
bill be considered as read.
Without objection, the first reading of HR 2516 is dispensed with. The gentleman from Texas, Mr. Green, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and also on the dais. The clerk will read the amendment.
Amendment in the nature of the substitute to HR 2516 offered by Mr. Green of Texas. Strike all after the enacting clause in.
Without
Chair, I ask
objection, the
that the
amendment in the
amendment be
nature of a
considered read.
substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman for Texas for 5 minutes to explain the bill and his amendment.
Thank you very much, Madam Chair. Let me start by giving you a special thanks for this opportunity, because it is by and through your good offices that this came to my attention. This is a most important piece of legislation. It's historic. And this bill would require the federal banking regulators to include a diversity and inclusion component in the CAMELS rating system to evaluate how federally insured depository institutions are promoting diversity and inclusion. Specifically, institutions would be rated on whether they have policies to encourage diversity and inclusion in their hiring practices, provide training to their employees on diversity and inclusion, and designate an individual to serve as a diversity and inclusion officer. That would be a DIO, who reports to the CEO. Depository institutions with more than $1 billion in total assets would be required to establish a committee for diversity and inclusion that holds quarterly meetings with the CEO and DIO. Federal banking regulators examine and rate a bank or credit union based on the Uniform Financial Institution Rating System, more commonly referred to as CAMELS. This system receives ratings from 1 to 5, 1 being the best and 5 being the worst, across 6 CAMEL components: capital adequacy, asset quality, management, earnings, liquidity, and sensitivity to market risks, as well as a composite rating. Simply put, what we would do is add diversity and inclusion to the rating system. Many of us have expressed our desire to see greater diversity and inclusion. This will give us an opportunity to transform that desire into a methodology by which we can achieve the desire. This is a very, very meaningful piece of legislation. It will also help with safety and soundness, because a lack of diversity poses a safety and soundness risk, as evidenced during the financial crisis when non-diverse institutions made more predatory loans, while gender diversity in leadership positions led to lower levels of non-performing loans and greater stability during the financial crisis. There seems to be something to this notion that if you're not at the table, you're likely to be on the menu. My hope is that by doing this, we will have all segments, subsets, if you will, of our economic order at the table, and therefore make sure that safety and soundness is at its zenith at all times. Madam Chair, there's much more that can be said, but I do want to close with this. The bill is supported by groups such as the National Bankers Association and the Communication Workers of America. They have submitted letters of support. With this said, Madam Chair, I will yield the balance of the time.
Thank you very much. Is there further discussion of our amendment to the amendment in the nature of a substitute?
Madam Chair.
The gentlelady from Missouri is recognized for 5 minutes.
I move to strike the last word. Madam Chairwoman, while the CAMEL's rating system is helpful for federal regulators to evaluate the safety and soundness of our financial institutions, the use of this rating system on a scale of 1 to 5 does not adequately assess an institution's commitment to diversity and inclusion. I think that when it comes to reviewing a company's efforts, we should ensure that the data gives us an encompassing assessment of the strides they are making toward more effective solutions. Unfortunately, this bill's mandatory reporting requirements and the use of a 1 to 5 rating scale would not allow for that to happen. I cannot support this one-size-fits-all approach to assessing a financial institution's D&I efforts, and I yield back.
Okay. Thank you. Is there further discussion of our amendment to the amendment in the nature of a substitute? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye.
Law enforcement officers risk their lives every day. They deserve better.
Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering HR 2516 as amended to be reported favorably to the House. All those in favor say aye. Those opposed, no. In the opinion of the chair, the ayes have it. A recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. A sufficient number having raised their hands, a recorded vote is so ordered. Pursuant to Section C5 of Committee Rule 3, the vote on this question is postponed. Pursuant we're going to change.
Pursuant to notice, the chair now calls up HR 2123, the Diversity and Inclusion, Data Accountability and Transparency Act. The clerk will report the bill.
HR 2123, a bill to amend the Dodd-Frank Wall Street Reform and Consumer Protection Act to require regulated.
Thank you, Mr. Clerk. Without objection, the first reading of HR 2123 is dispensed with. The gentlewoman from Ohio, Ms. Beatty, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are on the dais.
Thank you to the chair and thank you to Chairwoman Waters for considering my piece of legislation today. And that is, as you have before you, HR 2123. It is entitled the Diversity and Inclusion Data Accountability and Transparency Act. This committee's intent for section, as we all know, section 342 of the Dodd-Frank was very clear. The intent was for the offices of minority, women, and inclusion to develop policies to improve diversity and inclusion performance in agencies. We have had a plethora of meetings, of opportunities for them to come before the subcommittee and the main committee, and to require the OMWEs to examine the diversity and inclusion practices and performances of the regulated entities. All of my colleagues are fully aware that I have always asked this question of every agency with OMWEs to every OMWE director. We have brought them before our subcommittee, where my Republican colleagues also had the opportunity to put an expert on the panel. I have worked very closely with our ranking member on discussing OMWEs and the need for inclusion and data accountabilities. Now, we know that the OMWE directors have acted in good faith. We have not always agreed with their numbers or their works. We have agreed together in bipartisan fashion that we needed to do more to make sure that they were able to implement the policies that were set forth by the government in Section 342. The regulated entities have refused to share their diversity data in good faith, but we have made progress. Here's the good point. We recently had a hearing and we talked about data by the numbers. We have corporate entities and organizations to come on board and start self-reporting. So we're making progress. And this is why this piece of legislation is so important, because it will amend Section 342 to make it clear that the OMWE directors must have access to the diversity data. Here's the thing, some people are self-reporting. Some people are coming in, meeting with all of us, Democrats and Republicans, and telling their good news, how they're moving the needle forward, because we have not dictated to them a number, a percentage, but to ensure the members of this committee and Congress will have a clear understanding of the industry's diversity and inclusion performance. We have listened to you and heard you. We have heard the organizations, and here's what we have done. And here's what I'm asking you today. I ask for all of my colleagues to support in advancing the DI data bill, which will make participation in the self-assessment process mandatory for financial firms with more than 100 employees. And some of my colleagues on the other side raised some concerns. So in the step of a direction to work together and get your support, we have included that number of more than 100 employees. So if we want to meet the opportunity of working together on something that will move the needle for all of us, I am asking my colleagues to support this bill, and I yield back because we all know data is important, and we individuals self-reporting their data now. So let's just move the needle and amend it so we can move forward. Thank you.
Is there any amendment to HR 2123? And if none, is there further discussion of HR 2123?
Mr. Chairman,
The chair recognizes Ms. Wagner.
I move to strike the last word. Mr. Chairman, while I support the intent of this legislation, the Chairwoman's bill as written would impose a one-size-fits-all approach to the collection of diversity data and does not effectively measure commitment to diversity and inclusion and does not allow each entity to tell their D&I story in its full context. Making the reporting requirements under Section 342 of Dodd-Frank mandatory would be completely contrary to the 2015 joint standards adopted by the OCC, the Fed, the FDIC, the NCUA, and the SEC under the Obama administration. Under the bill, regulated entities would be required to disclose, and I quote, such information as may be required to carry out the duties of the director. The bill does not specify what information would be required to be disclosed and does not clarify the definition of diversity. I support Section 342 in its current form, which allows companies to provide the full picture of their work to advance diversity and inclusion, and therefore I cannot support this legislation. I yield back.
The general lady yields back. Is there further discussion on HR 2123?
Mr. Chairman, I move to strike the last word.
Who seeks recognition?
The Congressman from South Carolina, Timmons.
The gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to echo the ranking member's sentiment. I'm opposed to a one-size-fits-all solution to diversity data collection. Under the current regulatory regime, companies are enabled to tell their story in full context, providing data on their successes and failures in the diversity and inclusion space with information that is specific to their unique company. I also want to highlight why this bill is unnecessary, because private sector solutions are emerging that show government intervention is unwarranted. First, we know that companies have financial incentives to promote diversity and inclusion within their workforce. In 2015, McKinsey & Company released data from a study that showed that more diverse companies tend to be the top performers in their sectors. Companies with more diversity among their senior managers yielded higher profits. It is clear that companies that want to succeed must prioritize recruiting a diverse workforce. Second, there are several private sector initiatives to collect and publish diversity data without government action. In 2020, PricewaterhouseCoopers and Glassdoor released diversity and inclusion data for the first time. The data they collected includes race and ethnicity, gender identity, sexual orientation, disability status, parental status, and more. Glassdoor will release rankings based on the data they collect, which can be used not only by the companies themselves to guide their diversity and inclusion work, but for prospective employees considering joining a company. Similarly, in 2021, the Fortune 500 list will include diversity and inclusion rankings. Moves such as these will enable companies to continue to build on their success in this space, as well as address challenges and failures without needing to devote resources to mandatory government reporting regimes that are unable to effectively measure progress. I would encourage my colleagues across the aisle to keep in mind these promising new initiatives as they consider this legislation. I urge a no vote and I yield back. Thank you.
Will the gentleman yield?
Yes, ma'am.
Yeah. First of all, let me just say thank you. And certainly there's some things we agree on. In working with the McKinsey founders and reading their studies, you're absolutely right that the more diversity you have, the better the outcome is as it relates to productivity and moving the needle. Certainly when you and my good friend, the ranking member, have talked about this bill and its lack of creativity, let me just say for the record and to you, it is the direct opposite. It is not a one-size-fits-all. We're asking you to report your data, and it can be within the whole realm of creativity and what you have. We purposefully did not give a one-size-fit to say you have to be put in this box. And certainly, you know, we cannot advance or move the needle without data. And right now, with the 20% response rate, that is another reason. And lastly, it's important, I want to make sure, and you're probably aware of this, Congressman Timmons, that the Investment Advisors Association supports this, Certified Financial Planning Board supports this, Communication Workers of America supports this, North American Security Administrators and Association supports this. So I just want to say to you, we're not that far apart on where we want to get, but it is very important for me to say we are not taking away the creativity. And we have actually said in our last hearing, which my good friend and ranking member was in on, that we did not want to lack creativity so they could tell all of their stories. And with that, I thank you for yielding me some of your time. And let's talk offline, because I think I can get you there, because I like that you quoted the McKinsey folks. So thank you.
Yes, ma'am. Thank you, ma'am. I'll yield back to the chairman.
The gentleman yields back. Is there further discussion of HR 2123? Is there further discussion? If not, the question now occurs in approving the amendment to the nature of a substitute. All those in favor say aye. Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment to the nature of a substitute is agreed to. Pursuant to notice, the chair now calls up HR 1187. Pursuant to notice, the chair now calls up HR 1087, the Shareholder Political Transparency Act of 2021. The clerk will report the bill.
HR 1187, a bill to provide for disclosure of additional material information about public companies and establish a sustainable finance advisory committee.
Without objection, the first reading of HR 1087 is dispensed with. The gentleman from Illinois, Mr. Foster, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to HR 1187, offered by Mr. Vargas of California. Strike all after the enacting clause and insert the following.
Mr. Clerk, just for clarification, 1087 ANS Foster?
Amendment in the nature of a substitute to HR 1087, offered by Mr. Foster of Illinois. Strike after the enacting clause.
Without objection, the amendment in the nature of a substitute be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Illinois for 5 minutes to explain the bill and his amendment.
Thank you, Mr. Chair. Am I audible and visible here?
Apologies, Mr. Foster, could you repeat that?
Yes, am I audible and visible here?
You are both audible and visible, Mr. Foster.
Okay, thank you. Thank you. I was also confused by the order of the bills coming up here, but I'm ready to proceed. Well, first I want to thank the chair and Chairwoman Waters for her leadership in bringing up this bill and for continuing to prioritize this important and timely topic. Polls continuously show majorities from both parties support getting big money out of political campaigns, and that includes corporate money. The Shareholder Political Transparency Act, HR 1087, is a necessary first step to make sure that, at a minimum, investors have the information they need to make well-informed decisions on where to invest. If corporations are people, they should have opinions. And if those corporations are public, those opinions should be public. In recent months, it's been increasingly obvious that political stances of corporations are very material to their success as a corporation and their success with the public. And investors need to know those political stances, including political expenditures, as a very material metric in deciding whether to buy shares of a company. It's well known that corporations spend hundreds of millions of dollars to influence political campaigns every year. These decisions are usually made by corporate boards and executives or their designees rather than by the shareholders. And while these corporate boards and executives have a fiduciary duty to act in the best interest of their owners, the shareholders, it is no secret that the interests of executives are not always aligned with those of the shareholders. And there is no public purpose in keeping those political contributions secret from the shareholders. This bill provides transparency to corporate political expenditures. HR 1087 requires public companies to disclose on a quarterly basis the nature and amount of political donations made by the company. Public companies should also be required to disclose any anticipated future political expenditures on an annual basis when that is available. These disclosures would be made to the SEC and would be made publicly reviewable on the relevant websites. With this ANS, I am proud to say that this bill has the support of the Council of Investment Advisors, Common Cause, and Public Citizen. I'm proud to support this bill and urge all of my colleagues to do the same and yield back the balance of my time.
The gentleman yields back. Is there further discussion of or amendment to the amendment to the nature of a substitute?
Mr. Chairman,
Who seeks recognition?
Mr. Stroud from Wisconsin, I have an amendment at the desk.
The gentleman from Wisconsin is recognized. You have an amendment to the desk?
An amendment at the desk, yes, sir.
There's an amendment to the desk. The clerk will distribute the amendment. Have all members received the amendment? If so, I would like to reserve a point of order on this amendment, and the clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to HR 1087, offered by Mr. Style of Wisconsin. Page 6, after line 22.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes to explain his amendment.
Thank you, Mr. Chairman. Materiality, materiality, materiality. It is a cornerstone of securities law. My amendment to the ANS is designed to ensure that this bill is consistent with the fundamental, tried and true securities law touchstone of materiality, as opposed to cavalierly disregarding it after decades of successful implementation. As Ranking Member McHenry said earlier, this bill isn't really about better informing shareholders of the merits of investing in a business in order to get a financial return. My amendment centers on the bill on information useful to those interested in investing in a company. My amendment will ensure that the disclosures are not for political activists, but are for everyday investors who just want to understand how the company operates. Unfortunately, I suspect the bill is actually intended to cater to political activists rather than Main Street investors. My amendment ensures that the information provided is tailored to inform investment decisions that's actually useful to those investors. It requires disclosure only if there's a substantial likelihood that a reasonable shareholder would consider such information important with respect to making an investment decision. That's the Supreme Court standard for material information, TSC Industries versus Northway, for our security law geeks on the committee like myself. And to me, this is a common sense amendment. My amendment simply right sizes the disclosures to the appropriate bounds of established securities law. To that end, my amendment will bring Securities and Exchange Commission squarely back into its appropriate zone. That is, assessments of materiality. SEC bureaucrats should not be required to make political judgments for all public companies that choose to make donations to candidates or trade organizations or other entities. And by the way, companies do have a First Amendment right to make these donations on a legal basis. And so if my amendment is not adopted, the underlying bill will chill disfavored political speech and provide little benefit to investors. And that's the real crux here. It provides little benefit to investors because it's not addressing the key touchstone here of materiality. And with that, I urge my colleagues to support this amendment, and I yield back the balance of my time.
The gentleman yields back. Is there further discussion on the amendment?
Mr. Chair, may I be briefly recognized? Mr. Foster. Yeah, thank you. I do not support this amendment. Materiality is very clear if you just look at current events. You look at the behavior of corporations, for example, who are asked to support or not the actions of various political actors in the state of Georgia over the last couple of months. This is a clear example where corporations understand that their political stance is being looked at and will be very, very important to the political and to the financial success of the corporation. That's just one of many examples where this is important. Secondly, I really question whether it's a good idea to put the regulators in the position of calling balls and strikes on a contribution to this politician. That one could be material, but a contribution to a different politician may not. That doesn't seem like it's an appropriate use for of the time of a regulator or really serve any public interest. The simple rule, political contributions should be made public, full stop. So I don't support the amendment and urge my colleagues not to support the amendment. Yield back.
The gentleman yields back. Is there further debate on the amendment?
If there's no one else.
Okay. All right. Mr. Chair, I move to strike the last word.
The gentleman, Mr. Heising, is recognized for 5 minutes.
Thank you, Mr. Chair. And as I move to strike the last word, I want to support my colleague, from Wisconsin on this. You know, this act, as has been discussed, would require these quarterly reports, the SEC and investors detailing the amounts, the date, nature of the company's expenditures for political activities, whether they oppose or support a particular candidate, whether it's a trade association, excuse me, one of the things I think is most interesting is as well as the nature and the amount of political expenditures the company plans to make in the upcoming year. As we know, things move fast around here sometimes, as amazingly slow as it can be sometimes, most of the time, that there can be circumstances where things break free and they move very, very quickly. So we may even have circumstances where these expenditures that may be going into a trade association had never been planned. Now, that gets to my friend's discussion of materiality. Suddenly, if that's a significant amount of money, that becomes material. If it's ancillary, it's not. It's just something that an issue came up and they're going to be a part of it with their trade association. But that's not really what we're here about. Let's just call it what it is. It's name and shame, and they would like to have the, quote, corporate villains to be underscored again. And this is just one more example of what we are seeing, people trying to hijack our securities laws in order to push non-material social and political policies. Now, by all means, if political spending is material to the company, then they're already disclosing it under the law, as my friend from Wisconsin was discussing. However, that's not the intent of this bill. Instead, progressives want to see the SEC to be the top cop on policing societal ills, which is not part of the tripartite mission of the SEC. And Mary Jo White has talked about this. Other SEC heads have talked about this. They must remain focused on protecting investors, maintaining orderly, fair, and efficient markets, and facilitating capital formation. That's the three things that the SEC is supposed to be doing. This does none of that. So I'm curious why my colleagues on the other side of the aisle want to villainize these corporations. Well, let's discuss labor unions. I mean, they make political contributions that affect elections. They make decisions that are sometimes done without the rank and file. And you have to understand, my family has a deep, rich union heritage, and I have been endorsed by unions in the past and on my campaign. And I can tell you that their membership who come to me don't always feel represented by their leadership. So I'd love to see what's good for the goose is good for the gander on this. And I think we would all agree that unions should work in the best interests of their membership, but union members have not always had that feeling of knowing or understanding where their leadership is going. And so I've introduced HR 2640. It's the Union Member Protection Act, which would do just that and put union disclosures on the same level playing field as the proposed disclosures in Mr. Foster's bill. And labor unions would have to include in their reporting a description of the specific nature of any, quote, expenditures for political activities, close quote, and that the union intends to engage in the planned amount of those expenditures. So to be clear, this would level the playing field for the Democrats' proposed corporate disclosures under HR 1087 and the unions under my Union Member Protection Act. So it would allow union members to assess whether they agree with the planned priorities of their leadership and allow them the opportunity to object if they intended spending in problematic or that is problematic or does not represent the interests of those union members. This is the exact same rationale for the Democrats' claim that we need these disclosure requirements for corporations, and union members are even more tied to the union than shareholders are to a corporation. So if anything, this rationale applies to even more strongly in this context as far as I'm concerned. So if we're going to continue to just try to name and shame our public companies, we ought to have that same antiseptic, that same sunlight on our labor unions as well. And I will continue to oppose this bill and urge my colleagues to oppose it. But I hope that we have the courage to actually actually be intellectually honest in this, and I yield back the balance of my time.
Is there further debate on the amendment? Is there further debate on the amendment? If not, I recognize myself for 5 minutes. When the Supreme Court decided Citizens United versus the Federal Election Commission in 2010, it held that political spending is protected speech, and therefore corporations, unions, and other groups are permitted to make political contributions. Yet under current law, corporations are not required to disclose their political expenditures, even though such expenditures can have significant effects on a company's short and long-term value. We don't have to go too far to see these effects. Just this year alone, we've seen some of our nation's largest companies take reputational hits for giving money to politicians who supported the insurrection on January 6th that aimed to destroy our democracy. Last month, Americans across this country called for boycotts against companies like Coca-Cola, which gave money to members of the Georgia legislature who restricted the voting rights of Georgians, and in particular, Georgians of color. These are examples that materially affected shareholders. It is critical that investors and the markets be given this information so they are able to make the best investment decisions possible with their hard-earned money, and so they're able to hold the companies they are invested in accountable, and also so that they can make informed investment decisions with respect to this kind of information. For these reasons, I concur with the author, and I urge all members to vote no on this amendment. I yield back. Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. All those opposed, no.
No.
It is the opinion of the chair. The noes have it. The noes have it, and the amendment is not agreed to.
Mr. Chairman, I request a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is sufficient second, and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute? If there are no further amendments without objection, the previous question is ordered on HR 1087 and pursuant to section C5 of Committee Rule 3. Further proceedings on the pending amendments are postponed. Pursuant to notice, the chair now calls up HR 1187, the ESG Disclosure Simplification Act of 2021. The clerk will report the bill.
HR 1187, a bill to provide for disclosure of additional material information about public companies and establish a sustainable finance advisory committee and for other purposes.
Thank you, Mr. Clerk. Without objection, the first reading of HR 1187 is dispensed with. The gentleman from California, Mr. Vargas, the sponsor of the bill, has an amendment to the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to HR 1187, offered by Mr. Vargas of California. Strike all after the enacting
Thank you,
clause.
Mr. Clerk. Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from California for 5 minutes to explain the bill and his amendment.
Thank you very much, Mr. Chair. I appreciate taking up the bill. I thank you for that. I also want to thank the chair in particular for allowing me to present my bill today. Environmental, social, and governance matters, ESG matters, are of growing interest to the investor community. Investors increasingly view ESG disclosures as crucial tools and material information for evaluating a company's financial performance. Research has shown that companies that account for ESG factors tend to perform better with more stable return. As many of you are aware, in 2018, a coalition of asset managers, nonprofit organizations, public pension funds, and law professors filed a petition with the SEC for a rulemaking on ESG disclosure. That petition was the impetus for the original draft legislation, the ESG Disclosure Simplification Act. I hope this legislation will serve as a guide for the SEC to begin requiring such information in their disclosures. I very much look forward to Chair Gensler's work on ESG matters, giving his promising statements on the issue. Information is considered material if there is a substantial likelihood that a reasonable investor would consider the information important in deciding how to make an investment voting decision. The Supreme Court has explained, as my good friend Mr. Steele said, information is material if there is a substantial likelihood that disclosure of the omitted fact would be viewed by a reasonable investor as significantly altering the total mix of information available. However, Regulation SK does not require companies to only disclose information that meets the standard of materiality. The SEC has broad authority to require the disclosure of information if it would be in the public interest or would protect investors. Still, factors that tend to predict better and more stable returns for investors, I believe, are inherently material. From the petition I mentioned earlier, it is clear that the ESG factors are essential to investors' evaluation of whether company A can provide better returns than company B, when company A has improved in areas related to ESG and company B has not. Additionally, Gary Gensler was confirmed by the SEC as SEC chair last week by a bipartisan vote in the Senate, has stated the question of whether something should be considered material is up to the investors. Determining whether a metric is material should be based on whether investors need that information in their decision to buy or to sell stock. It should not be solely based on a calculation of financial significance. Investors need access to the information they see as essential in these decisions, which increasingly has included a need for ESG metrics. My bill would accomplish that goal. Chair, I also want to say that there are supporting organizations, the North American Securities Administrators Association and Public Citizen. With that, Mr. Chair, I yield back.
The gentleman yields back. Is there further discussion of or amendment to the amendment in the nature of a substitute?
Mr. Chairman, I have an amendment at the desk.
I'm sorry, who seeks recognition?
Mr. Chairman, Style from
Mr. Style.
Wisconsin. I have an amendment at the desk.
The clerk will distribute the amendment.
With the mask, you can't see.
Have all members received the amendment? If so, I'd like to reserve a point of order on this amendment, and the clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 1187, offered by Mr. Style of Wisconsin. Strike Section 2.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes to explain his amendment.
Thank you, Mr. Chairman. Some may notice that, like my amendment to the earlier mandatory disclosure bill, this amendment is somewhat similar. I would note, though, is a point of process that this bill didn't go through the subcommittee of cap markets, where we could have, I think, had a really robust discussion of whether or not these items are measurable, and kicking this over to the SEC and to a committee to make that analysis rather than this legislative body, I think is a real missed opportunity to have that type of a robust discussion here in our committee, either in the full committee or in the capital markets subcommittee. But I'll park that because I don't control the process here. But again, this amendment I think is pretty straightforward. Is noted public companies must only make disclosures under the ESG Simpler Disclosure Simplification Act of 2021 if the disclosures are actually material to the average investor. And so my amendment would get rid of the provisions in this bill that deem these so far undefined ESG metrics de facto material. And I'll note again that these are so far undefined. I think that's a missed opportunity for us to have that robust discussion regarding the measurability of the factors here discussed. Information is either material to investors or it's not. And that's really important to Main Street investors that are trying to weed through all the information that's out there. And Congress really shouldn't be telling public companies on a whim that certain information is de facto material, or particularly when we don't even know what the information is yet. So my amendment, to me, it shouldn't be controversial. It's informative. If information is not material to the company, why should we force these companies to disclose it? Requiring disclosure here seems wasteful and ultimately potentially confusing to investors, so harming investors rather than helping investors. Would opponents of this amendment, would they want the SEC to force financially immaterial information into disclosure to punish disfavored industries? And if so, it would set a really dangerous precedent that could easily lead to significant capital misallocation, perhaps even leading to an asset bubble in favored companies or industries. And so to be clear, this is not intended to prohibit disclosures of ESG factors. In fact, companies are available to disclose as they see fit. The question is what is required. And so under my amendment, companies are still required to disclose any ESG information that is actually material. And of course, they're welcome to disclose any additional ESG related information that they would like to voluntarily. But I can't believe the SEC, with no particular expertise in these matters, will generate a metric that is broadly useful and provides company-specific information that is helpful to investors outside the touchstone standard of materiality. And so if ESG metrics are actually material, companies must disclose them. If not, they should not have the added expense of having to deal with potentially complex, confusing, and costly congressionally mandated disclosures. And so, consistent with my previous amendment, I think we need to rely on the touchstone of materiality. I think it's critical to investors, critical to maintaining investor information, in particular Main Street investors, functional for our capital markets, good, solid capital allocation. And with that, I urge my colleagues to support my amendment.
Will the gentleman yield?
I will yield.
I have a quick question for you. I think we need to explore this a little bit more of what some of those misallocations might look like. I mean, it's a kind of a technical term, but when we talk about misallocation of capital, I want to try and make that relevant to folks listening.
It's so important in our capital markets that we have an efficient mechanism of deploying capital. And when you have political decisions rather than material decisions driving information for investors, it would be very rational to think that investors are going to be driven into investments based on political whims rather than on investment returns. And so when you talk to mom and pop investors, folks that are trying to save for retirement, save for their kids' education, those types of investments need to be guided by good, solid investment decisions, which our materiality standard currently provides, rather than political willy-nilly decisions that are being made by this committee on standards that in very large part are unmeasurable. I think would confuse investors, and we might be driving capital into less efficient means by doing that.
I know time is running out, but that could be institutional investors as well, correct? For retirement funds, et cetera?
Absolutely true.
I yield back.
The gentleman's time has expired. Is there further debate on the amendment?
I move to strike the last word.
The gentleman's recognized for 5 minutes.
Thank you very much, Mr. Chair. I appreciate it. I'll try to be brief. They say that beauty is in the eye of the beholder, but materiality is in the eye of the investor, not the company. I think that Mr. Stile puts it backwards, that materiality is in the eye of the company. No, it's the investor. And certainly we have asset managers, nonprofit organizations, public pension funds who invest significantly and want this information. I would also say, as he stated, many companies do in fact give this information because it is important, and it also creates an uneven playing field when some companies are giving this information and some are not. That's why I think it should be required that all companies give information on ESG. But again, materiality is not in the eyes of the company. It's in the eyes of the investor. The investors are the ones that want to know if it's material. And I think it is important that we have this information because, in fact, people who do invest, asset managers, profits, pension funds, and regular old investors want to know this because companies that do well on ESG normally perform better. We've seen that. So that's why I think this information is important and required. I yield back.
The gentleman yields back. Mr. Heising is recognized for 5 minutes on the amendment.
Thank you, Mr. Chairman. I move to strike the last word. And before I turn it back over to my friend from Wisconsin, my friend from California, materiality is in the eye of the investor, not the corporation. Amen, hallelujah. Not the regulator. Materiality isn't in the eye of the regulator so much. It has relevance. But what we're trying to do here, what you're trying to do here today, is put it in the eye of the woke politician. That's what you're trying to say is what materiality is. And that's the exact opposite direction where we should be going. We've had numerous conversations in this committee that have talked about activist shareholders and what those rights are or are not. What can they do when they're going into a board meeting? What can they do when they're going into a shareholder meeting? What demands can they have? And your side has fought vigorously against any sort of restriction on that, about repeatedly bringing up these issues because your belief in the voice of the investor is so important. You're throwing that all away right here. It's literally, you're trying to have this in the eye of the politicians in Washington, D.C., who are then going to direct the regulator to decide what that investor believes in or what it should be looking for. Leave it up to the investors and the company and the people, those shareholders who are the owners of that company. They're the ones that properly should be demanding what information is relevant and not relevant. And I'll just point out, there's been issues in California with CalPERS, where people have been questioning the investment strategy and whether they're getting the proper return on their investment for their retirement. And that is really what we're fighting for here. And I go back to the 3 points of what the SEC is in existence for. It's capital formation, it's efficient markets, and it's protecting the investor. That's not what we're doing here. So I'd like to yield to my friend from Wisconsin for a moment, if you'd care to take the time.
Very much. I appreciate it. I think we really hit the nail on the head here, where we're flipping the materiality standard. If I put myself almost in the shoes of a securities law attorney sitting in a publicly traded company in the United States, taking the standard offered by my colleague across the aisle, that if it was in the eye of the investor, I'm thinking if it was McDonald's, I would want to know, why is the McRib not available every day, and can I get a Shamrock Shake on time? Because that's material to me. It's definitely not material to the investor. It's not material to the company. It shouldn't be a standard by which the SEC is analyzing. If it was an airline, material to me is what time is the flight? What time does Delta, United, and American leave? That's material to me. It's not material to the returns of the company. And so the materiality standard needs to be set where the company is determining what to disclose based on the materiality and the knowledge at the publicly traded company here in the United States. They're held to account by the SEC. And as we allow politicians to come in and to determine kind of willy-nilly, without an analysis, without any discussion of whether or not these factors are material, without even discussing in nuance of any substance what these factors are, I think puts us in place of really taking our securities law system and turning it on its head. We've seen this now on 2 amendments that have pushed through committee here. This one in a previous. We've seen it over our past session of Congress, where we had HR provisions put forward that weren't tied to materiality, and in particular, they weren't tied to whether or not they were substantively measurable. It seems like a trial lawyer's dream to be able to come in and to have this discussion of what is and what is not material in the eyes of an investor. It's what is material for investors is determined by the company as put forth, held to account under our securities law regime, held to account by our regulators. And I really think the underlying bill that I'm trying to amend with the materiality threshold is really somewhat consistent with what we're seeing on the other side of the aisle, but continues a pretty dangerous practice of really turning our investment practices of our securities law regime on its head. And so, observant to the time, I'll yield back to my colleague from Michigan.
Thank you, and I'll just finish up with this. The definition of material under Rule 405 under the Securities Act, when used to qualify a requirement for the furnishing of information as to any subject, that limits the information required to those matters to which an average prudent investor ought reasonably be informed before purchasing the asset. I yield back.
The gentleman's time has expired. Is there further debate on the amendment? The gentleman from Illinois, Mr. Garcia, moves to strike the last word and is recognized for 5 minutes.
Thank you, Mr. Chairman. I move to strike the last word. I rise in support of the ESG Disclosure Simplification Act that Mr. Vargas and I introduced this year. Companies weigh in on debates about environmental and social issues more than ever before. And our communities deserve to know whether companies are really walking the walk. Our bill is simple. It requires more disclosure about the companies are really doing about human rights and sustainability. Consumers and investors want to know, and this bill is a simple step toward giving them the information that they need. I oppose the amendment and urge passage of the underlying bill. I yield back.
Is there further debate on the amendment? The gentleman from Kentucky, Mr. Barr, is recognized for 5 minutes.
Thank you, Mr. Chairman. I appreciate the comments from my colleague and friend from Michigan, Mr. Huizinga, and I appreciate the amendment offered by my friend, the gentleman from Wisconsin, Mr. Stile, and support the amendment. And I reluctantly oppose my friend Mr. Vargas's legislation. You know, what we've seen is a troubling trend of the politicization of the allocation of capital, the politicization of access to capital. And this ESG disclosure, mandatory disclosure concept is unfortunately really just a naming and shaming exercise. It's a way to interject politics into finance, into capital formation in ways that discriminate against law-abiding companies. They may be fossil energy companies. They may be politically incorrect businesses. They may be firearms manufacturers. They may be businesses that some on the far left deem to be unfashionable at cocktail parties or other places. But it may not be for the average retail investor. And I think we, as members of the Financial Services Committee, members of Congress representing middle-class savers all across this country in every one of our districts, what we should be focused on, what our North Star should be focused on, what the Securities and Exchange Commission should be focused on, is maximizing investor returns. That's really ultimately what's material to the average reasonable investor. Now, it may be the case that an individual investor has an interest in environmentally conscious businesses or businesses that have some kind of corporate social responsibility ethic to it. And I don't think it's the role of the SEC or the Congress to tell an individual investor that he or she cannot deploy his or her capital the way he or she sees fit.
and that includes socially conscious businesses that align with their personal views. But for many investors, that's really not what is the most important. And I would argue that most investors, when they deploy their capital, when they're saving for retirement, when they put their money in a 529, their ultimate objective is what? To save for college, to save for retirement, to achieve financial independence. And so to the extent any of these ESG funds that have high fees minimize investor returns, compromise investor returns, do not prioritize the shareholder, it means that these middle-class Americans are not getting the bang for their buck in terms of their investment. And so I simply would say what we need to focus on is not mandatory ESG disclosures. What we need to focus on is materiality. What we need to focus on is investor returns and a competitiveness in our capital markets as opposed to allowing the SEC or directing the SEC in this case to politicize access to capital. That's not what we should be doing. We should be focused on, we in Congress and the SEC should be focused on maximizing investor returns and not permitting public companies to squander the retirement savings or the college savings or the investment savings of middle-class Americans so that they can go on a political errand. That is the very definition of a breach of a fiduciary obligation. So look, if you're an environmentally conscious investor out there, have at it. Invest in whatever sustainable company that you want. If you have a particular social cause and you want to make sure that your dollars don't go into that public company that does something you don't like, that's fine. Scrutinize those public companies. Do what you need to do. But don't compromise the returns for millions of other Americans who depend on those fiduciaries and those directors and officers of those corporations or those asset managers to maximize returns for those investors. Will the gentleman yield? I will. I'll yield to my friend from Michigan. I'm just wondering if the gentleman from Kentucky is aware of the recent report from the Securities and Exchange Commission about doubting about the veracity of some of these self-described ESG investment opportunities. They're discovering that they may not be all that environmentally sensitive or governance sensitive. And I'm curious if the gentleman shares the same concern that I have. I know we've chatted about it briefly.
Well, I appreciate the comment, and that is obviously a concern. But the accuracy of some of these metrics, and when companies kind of have to go through the motions, maybe their disclosures aren't always as accurate as they portray them to be, because it's just standard operating procedure. So I appreciate the gentleman's comment, and I yield back.
The gentleman's time has expired. Is there further debate on the amendment? Is there further debate on the amendment? If not, I'll recognize myself for 5 minutes. I think the entire conversation actually underscores the need for this legislation. I think that the debate about whether or not this information is political should really be something that's discerned by the investor. And I think that whether or not ESG, environmental, social, or governance concerns are comparable to the McRib should actually be analyzed and assessed by the investor. And this legislation doesn't put the information into the eye of the regulator. It requires the regulator to ensure that it gets in front of the eyes of the investor. And so whenever it comes to making sure that information is being available to the people, rather than us debating whether it's comparable to the McRib or whether it's political, the people should be able to receive that information, discern that information, and determine whether or not that information is worthy of their investment. Also, contrary to the statement that was made earlier, I'd like to note the bill was noticed and considered at the Investor Protection Subcommittee hearing on February 25th, entitled Climate Change and Social Responsibility, helping corporate boards and investors make decisions for a sustainable world. It was also considered and debated in this committee last Congress. The SEC is responsible for investor protection and disclosure. Is the fundamental way it achieves that important objective. In fact, the SEC mandates disclosure on a wide variety of issues, including litigation and human capital management. We are not asking the SEC to solve these issues, simply to present them to the public. We're requiring public companies to disclose them to investors, so investors have the information they need to make sound and informed investment decisions. Capital markets have been around for generations, and as generations pass, the requirements of investors to be able to make informed decisions evolves. Environmental concerns are not political concerns as much as they are also scientific concerns, and the science also has impacts on the sustainability of businesses. The standard for materiality is whether there is a substantial likelihood that a reasonable investor would consider the information in question to be important in making a buy, sell, or hold investment decision or a voting decision. And it was previously stated by one of the retiring speakers that if certain investors want to invest under those categories, then have at it. Or if they're going to have at it, then shouldn't they have the information to have at it? In this case, we need not pontificate on whether a reasonable investor would consider this information important, because investors already do. It is clear that investors want more information about how issuers are handling environmental, social, and governance issues. In fact, even though the number of shareholder proposals has declined each year, the number of ESG-related proposals has continuously increased. The Government Accountability Office in the July 2020 report found that institutional investors agreed that ESG issues can have a substantial effect on a company's long-term financial performance. Similarly, a recent survey found that the majority of investors and fund managers believe ESG policies have positive impacts on returns, and 83% of the respondents noted that they expect ESG to be even more important by 2025. Put simply, ESG issues have an impact on shareholder value. For these reasons, I urge all members to vote no on this amendment, and I yield back. Is there further debate on the amendment? If not, I withdraw my point of order and the question occurs on the amendment. All those in favor of the amendment, please say aye. Aye. Those opposed, please say no.
No.
In the opinion of the chair, the noes have it. The noes have it, and the amendment is not agreed to.
Mr. Chairman, I request a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is sufficient second, and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion? Is there further discussion of amendment to the amendment in the nature of a substitute? The chair recognizes the gentleman from Michigan.
Thank you, Mr. Chair. An amendment at the desk.
The clerk will distribute the amendment.
Mr. Chair, I would point out that this shouldn't take long to review my amendment.
Have all members received the amendment? The author has asked me to note that the amendment is quite lengthy. If so, I would like to reserve point of order on this amendment, and the clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 1187 offered by Mr. Huizenga of Michigan. Strike section 2.
Is that all, Mr. Clerk?
Yes.
Without objection, the amendment will be considered as read because it has been. The gentleman is recognized for 5 minutes to explain his amendment.
Thank you, Mr. Chairman, for not interrupting the reading of my amendment. Yes, this is it, folks. Strike section 2. This is not complicated, yet it's a complicated issue. I understand that. And Mr. Stile and Mr. Barr and Hill and others of my colleagues have spoken eloquently about the role of materiality in our securities disclosure regime. And I could not agree more. And I don't want to particularly belabor the point, but I rise instead today to offer my own even narrower amendment. Namely, I rise to point out that H.R. 1187's findings, which my amendment strikes, are frankly flatly wrong. In particular, I want to highlight finding number 2. It says that the SEC, quote, does not require companies to disclose environmental, social, and governance matters, and does not require companies to adhere to standards for disclosing such information, close quote. That statement is incorrect, and on at least 2 different levels. First, as my colleagues have noted, if a company faces material risks or has other material information relating to any topic, including anything in the ESG space, current security laws require disclosure. So let me repeat that. If there's material information affecting the price and the value of an offering on any topic, it must be disclosed. That includes environmental and social and governance issues. That's what the law says today. That, by the way, is contrary to the finding number 5, which implies that the Commission has not already established standards for disclosure of ESG matters. The standard already does exist. It's called materiality. Wait for it, folks. However, finding number 2 is even more straightforwardly wrong. The SEC certainly does specifically require disclosure on those environmental, social, and governance matters. I direct my colleagues to Regulation SK, perhaps the most important set of the public company disclosure rules. In particular, let's take a look at the 300 and 400 rules. It's chock full of corporate governance disclosure requirements. Let me just list a few line item disclosure requirements so folks don't think I'm just making it up. Line item 303, management's decision and analysis of financial condition and results of operations. Items 307, disclosure controls and procedures. 308, internal controls over financial reporting. Item 401, directors, executive officers, promoters, and control persons. Item 402, executive compensation. 406, the code of ethics. And my personal favorite disclosure requirement, given that proponents of the bill think that the SEC does not require disclosure of governance matters, item 407, titled corporate governance. So that's only about half of the 300 and 400 point rules. Plus there are a whole lot of other requirements throughout the securities laws. So in terms of environmental disclosure, the SEC has been clear that certain material environmental risks must be disclosed. And they put out detailed guidance to that effect. While it's often unclear what qualifies as, quote, social disclosure, a problem in its own right and something that we have talked about within this committee, how you are going to actually define that. I will note that Congress has layered on some pretty costly and unnecessary costly social disclosure requirements over the years, including conflict mineral requirements and the resource extraction rules that were in Dodd-Frank. I would argue that these are bad and harmful disclosures. And do we really want more of that? But there's also thoughtful social disclosures, like the recently enacted human capital management rulemaking. Those will allow for thoughtful company-specific information to be presented to investors rather than jamming up shareholder documents with one-size-fits-all social disclosures. In any case, all that to say that the public company disclosure regime has plenty of requirements around environmental, social, and governance topics, and it would be folly for Congress to say otherwise. So look, folks, at the end of the day, here's what you're seeing. You're seeing one side who has a belief in the supremacy of government, and the other side, my side, that has a belief in you, the investor, and your ability to wade through this relevant information. And that is really what this is about today. And we are here to, again, to support the SEC in its 3-point requirement, which is to help capital formation, to build efficient markets, and to protect that investor. And that's what my goal is here today. And with that, I yield back.
The gentleman yields back. Is there further debate on the amendment?
I move to strike the last word.
The gentleman from California is recognized.
Thank you very much, Mr. Chairman. I hate to oppose my good friend, Mr. Huizinga's amendment. However, I think I want to read it since his amendment's so short. I'm going to go ahead and read the section because that's fairly short too. Congress, and it's under Section 2 findings. Congress finds the following. Securities and Exchange Commission has broad authority to require the disclosure of information if such information is in the interest of or is material to investors. I would note that it's in the interest of or material, not just material. The second part, the Commission does not require companies to disclose information related to environmental, social, and governance (ESG) matters, and does not require companies to adhere to standards for disclosing such information. Good friend, Mr. Huizinga, says that that's untrue, Mr. Chair. I would note that in fact it's absolutely true, because the Commission does not require companies to give ESG disclosures. In fact, most companies they're listed don't give ESG disclosures, so obviously they're not required to do so. I mean, that's simple logic. I don't know how that logic gets twisted and says, no, they require it when it's not required and most companies don't do it. But anyway, I don't follow his logic, but anyway, this statement is true. Investors have reported that voluntary disclosures of ESG metrics are inadequate. That's true too. A rule requiring reporting and standardizing of ESG disclosures is in the interest of investors. Investors want to know this information. Absolutely. The ESG matters are material to investors, and the Commission must establish standards for disclosure of such information. In fact, we just had a statement from the other side saying that these things aren't standard. In fact, some companies cheat, they're not in the same playing field. Well, that's what this attempts to do. That's exactly what this bill does. But in plain speak, I guess I would say this. What this discussion really reminds me of is really the whole issue of climate change. For the last 9 years that I've been here, I've tried to convince many of my colleagues on the other side that climate change is real. That in fact, environmental issues are changing because of climate change. And 9 years ago, when I first got here, there was, I don't want to say anger because so many of my Republican colleagues are friends, but discussion that was quite heated saying, no, that's not the case. The climate's not changing. They'd make excuses like the cows and I don't know, some really things I couldn't even follow what the hell they were saying. But now, very few Republicans would say that climate change is not real. In fact, it is. It's a very important environmental issue for everyone, not only Democrats, Republicans, because it's real. That's the same thing here. We want to know about these things because they're real, because companies do perform differently depending on how they do with ESG matters. For example, the issue of these hurricanes. I mean, I was in the insurance business, as some of you for a while, and you know, we used to call CATs or catastrophes, happened every 10, 25, 100 years, or 250 years. We used to call them 100-year event or 250-year event. They're happening every 25 years now. The hurricanes are getting bigger. The damage is getting more astronomical. And why is that? The climate change. So we still may disagree that part of that is made by humans. And I wouldn't, of course, I do think the fossil fuels. And one of my colleagues says, well, it's because some companies, you know, maybe dislike because they're, you know, somehow the liberals don't like them because they're fossil fuels. But well, you know what? I'd like to know. I'm going to invest, and I do invest. I want to know the company bases its future on fossil fuels, because I don't think fossil fuels are the future. I don't. I think alternative energy is renewable energy, sustainable energy. I'd want to know this. this is information that I want to know. That's why I think it's so important. So again, I hate to disagree with my good friend on the other side, but I'll have to and oppose this amendment. Again, I thank you, Mr. Chair. I yield back.
The gentleman yields back. Is there further debate on the amendment?
Mr. Chairman, I move to strike the last word.
The gentleman from Wisconsin is recognized for 5 minutes.
From the last few moments there from my colleague, it seems like a real opportunity to go back to my amendment when we vote on it later and really consider that materiality threshold. I think that would actually flush out a lot of the concerns. If your company is involved in oil drilling, some of these things as to whether or not you think oil is going to be continuing to be used in the future or it's not, that's probably could easily be a material issue for that company. That does not mean that all ESG matters are material. And so if we got back to kind of the root core here, to me, of our securities law framework of materiality, I think it would actually flush out a lot of these issues that we have. It's definitely going to be material in some situations for some companies. There's nothing wrong with that. A reasonable investor would want to know. But where it's below the materiality threshold is where we're just putting undue burdens on U.S. publicly traded companies to the detriment of our global competitiveness. So I'll leave it there, but I just think it's an important point to keep in mind when that vote comes up probably later this afternoon. Also, I'll yield my time to my colleague from Arkansas, Mr. Hill.
I thank my friend from Wisconsin, and I thank my friend from California for the amendment and his debate. Appreciate the courtesy of our acting chair this afternoon. But I really want to urge members to, as Mr. Vargas said, let's not debate whether people think climate is changing or not. Let's talk about reactions to that, strategies around that, the proper approach in regard to it, and quit bringing up something that happened, 5 years ago or 10 years ago, or what somebody said to somebody in the hallway a decade ago. I don't think it's relevant. What I think is relevant is focusing on the science and focusing on the state of financial capability, financial disclosure and metrics, and deal with the reality that we have it today. But just on this subject of the hurricane subject, it's always brought up in this committee, like hurricanes are the number one thing people talk about. Again, I cited a few weeks ago in this committee NOAA's own statistics on this subject. And there is not a direct pattern about more hurricanes. What's happened in the past 20 years, certainly, is because of the development of the Gulf Coast, the Florida coast and up and down the Atlantic seaboard. Any impact of any hurricane of any strength is more destructive. So certainly property and casualty losses are up due to the intense building subsidized by the National Flood Program, I might add, out there on the coasts. But looking at NOAA's own data from 1851 to 2019, it just says very clearly, since 1851, there have been 294 hurricanes, 1.7 per year. The last decade, there have been 10, below that average. They go on in quite detail about the trend line and whether it's a Category 3 or Category 5. But there is no doubt our property and casualty insurance companies face more risk because of the intensive development authorized by local mayors and county judges to cram more expensive housing and commercial structures in deeply hazardous areas on the beach. And I would add one other comment, and that is, again, part of this realism as we transition to a cleaner, more carbon-free energy source, looking at the Energy Information Agency's own data. We'll be consuming these fuels for decades to come because of that nature of that transition, despite the adaptation of renewables and new battery technologies and all the things that we're all hopeful for, including harnessing the power of the sun. So we have to be realistic about this, and that's why I support the business judgment by boards of directors at deciding what's the right thing for them to disclose to educate their shareholders about these issues. And we'll talk more a little later this afternoon about whether they're even comparable or whether the metrics are ready for
a disclosure based on Michael Bloomberg's task force on financial disclosure. So I thank my friend from Wisconsin, and I yield the time back to him.
Well, I'm happy to take 10 seconds and just point out to my friend from Arkansas and Wisconsin, as well as California, that when we use terms like climate change with no definition, it's because we want to use them however we need them for that moment. And that's part of the problem with this entire discussion. I yield back.
Gentleman's time has expired. Is there further debate on the amendment?
Mr. Chairman,
The gentleman from Illinois, Mr. Caston, is recognized for 5 minutes to strike the last word.
Thank you, Mr. Chairman. I just want to thank Mr. Vargas for introducing this. I want to oppose the amendment, but I want to just, we've talked about this paper before, but I want to encourage everybody on this committee to read the report that the CFTC released under the Trump administration, Managing Climate Risk in the U.S. Financial System. And I want to specifically read you all a paragraph out of here specific to Mr. Vargas's bill. An example of the challenges around climate risk data is the wide variation in available ESG and climate scores. Massachusetts Institute of Technology Research has found that ESG scores from the 5 main ESG data providers are uncorrelated for any given company. Many practitioners are uncertain about which factors are best suited for particular use cases, a problem compounded by lack of transparency into underlying data and methodologies. In other words, here we've got this huge class of investments, huge amounts of money flowing into the space. Investors want to invest on an ESG basis. And yet, because there is no consistency in the way that companies are reporting, the entities who are trying to come up with independent scores have completely uncorrelated results. Now, that's not because ESG is bad. It's not because the investors are dumb. It's because there's not a consistent reporting methodology. And Mr. Vargas is exactly right to say we need to have companies disclose how they're reporting these. We need to have them provide consistent standards. This needs to be objective. It needs to be verifiable. And if we do that, then we on this committee are doing our job to ensure that investors have the information they need to best allocate their capital. And that shouldn't be controversial. So I thank Mr. Vargas for this bill, and I would encourage rejection of this amendment to strike really the meat of what this is accomplishing. And I'd be happy to yield back the balance of my time to Mr. Vargas if he has a comment, or to the chair if he is speechless by my wisdom.
Well, I would just take a moment to, and again, I thank you very much for your comments, Mr. Caston. The only thing I would add to what Mr. Hill said, my good friend, Mr. Hill, is that he mentioned the amount of hurricanes hasn't changed. He didn't talk about the most important thing, which was intensity, the intensity of the hurricanes. I think that there is scientific knowledge now on the intensity of these hurricanes. These hurricanes have gotten bigger, especially category 4 and 5 level that we didn't have before. And the science tells us that's because of the warming of the ocean. So again, not the amount of hurricanes, it's the damaging nature of the larger hurricanes. We just saw 2 sweep through Central America, Iota and Iona. And again, they were huge hurricanes. They've had a lot of hurricanes in Central America, but they're larger and more damaging. I do agree that also because there's been more intensive development along the coast. There's no doubt about that. I wouldn't argue that point, but I would argue the point that the hurricanes have certainly gotten more intense. They've gotten bigger, and that's a real problem.
A friend from California yield?
It's not my time. Otherwise, I would. It belongs to Mr. Caston. I yield back to Mr. Caston. I'm sure he would want to yield to you. I yield to you then, Mr. Caston. I yield. Yes, of course.
Well, I thank you both, one in absentia and one directly. On the subject of strength, and you raised a good point, Mr. Vargas, in looking at that same NOAA data, in looking at landfalling Category 5 hurricanes, there's only been 4 landfalling Category 5 hurricanes recorded: 1935, 1969, 1992, and 2018. And it's noticeable that they're roughly evenly distributed across time. And over the analysis that NOAA did, there have been 18 Category 4 hurricanes since 1900, with the busiest time in the 1940s and 1950s. Taken together with those 5s, the trend line has been down on intensity. But again, let me repeat my point where there's agreement
which is because we've chosen to build up the coast and increase insured risk on our coastal areas prone to hurricane, the property and casualty risk is higher, but the intensity and the number don't represent some dramatic change in the last 20 years. I thank my friend and I yield back to him.
With that, I believe that.
Move to strike the last word.
The gentleman yields back. Who seeks recognition?
Davidson from Ohio, move to strike the last word.
The gentleman is recognized for 5 minutes.
I thank the gentleman. And look, I appreciate the work today. I particularly want to thank Mr. Stile for the amendment he offered earlier, but just to talk about these goals, you know, in my environmental, social, governance disclosures, I think it's important to think about how, as a country, we built the strongest, most robust capital markets in the world. You know, we didn't do this by embracing stakeholder capitalism. We did it by embracing free markets and shareholder capitalism. These principles have worked so well that as of January 2021, the United States accounts for 55% of the world's equity market. Not only is this an astonishing number, but when you consider the bureaucratic red tape that companies face when looking to access our capital markets, it's incredible that our market is as big as it currently is. I say this because I believe we need to continue to embrace the principles that our markets were built on. Unfortunately, the bill does exactly the opposite. The bill opens up companies for stakeholder criticisms by forcing them to disclose ESG metrics that are standard, not customized to the goals and objectives of the firm. Furthermore, the bill tasked the Securities and Exchange Commission with defining whatever these ESG metrics are. And I fear that's going to result in overly broad definitions and overburdening disclosure requirements. This amendment hedges against the bill itself and some of our efforts to amend it hedge against these scenarios. It's essentially a way to apply more woke capitalism and implement overly broad definitions to advance an agenda. Frankly, woke capitalism isn't worth saving. It misconstrues the purpose of a business by thinking that it exists merely to appease certain political viewpoints, and it's wrong. A business exists to provide goods and services that individuals want, as well as provide jobs, for sure. But forcing businesses to succumb to political pressure by mandating these disclosures on hot and button issues only opens the door to more regulation. The amendment would stop any potential regulatory overreach, or some of the amendments would work to stop the overreach. And I think the big thing here, look, shareholders start companies, founders start companies, they launch the companies with goals and objectives, and there are firms that launch with specific mission statements and objectives. This tries to force a one-size-fits-all definition. It'll be driven and enforced by the SEC in part, but it's really going to be driven here by the same sort of woke alliance between the far left part of the Democratic Party and people outside it, frankly, and this new alliance with big businesses. Should these overbroad ESG disclosures be mandated, it would arm activists and regulators with the ability to nitpick information and use it as a basis to force companies to operate within this new system. It would essentially force company directors to be walking on eggshells each time they have to make important business decisions, including hiring their management teams. The fiduciary duty of care and loyalty that directors have towards their companies and shareholders would become irrelevant, distorted, and diluted. I would ask my Democratic colleagues to entertain a scenario for 1 second, because this is where this legislation is going. I mean, some of the goals are laudable, but to totally misconstrue the role of a fiduciary, we have to recognize that stakeholder capitalism is a distortion of a fiduciary duty of care and loyalty. And, some may try to say that shareholders can be stakeholders too, in which case my response to them is, well, then let the shareholders, in their capacity as owners of the company, voice their own opinions through their shareholder voting rights. This bill is a blow to shareholders everywhere, but at least we could go in a different way that would limit the definition, not empower more bureaucrats. I understand the bill will likely have enough partisan support to pass. However, I urge my Democratic colleagues to reconsider and let firms honor their traditional role. Let members and board members serve as real fiduciaries. And I yield back.
Would the gentleman from Ohio yield to Huizenga?
I would yield to Mr. Huizenga.
Okay, thank you. I do want to point out one factual inaccuracy that was brought up by Mr. Caston. That CFTC study was actually under Democrat Ross Benham. He was a Democrat commissioner that issued that, and that was not a Trump CFTC study. So with that, I yield back.
And I yield.
The gentleman's time has expired. Is there further debate on the amendment? Is there further debate on the amendment? If not, I recognize myself for 5 minutes. I really appreciate the debate over the amendment. I think that it actually underscores the need for the legislation. Today, I learned that it might not necessarily be hurricanes that are impacting the cost of property and casualty and the earnings per share of property and casualty insurance companies along the Atlantic coast. It might actually be public policy. It might actually be political actions. And if that's the case, and that actually underscores the need for the previous legislation, because then I'll be able to know, okay, who's contributing to those guys and causing my investor interests in those particular companies to take a hit. I think we've just really underscored and uncovered the need for us to have more information out there. I've learned so much about ESG. I've learned so much about CMW, and I've learned so much about the value of information in these particular areas, for shareholders to be able to make an informed decision. And I think that having that kind of information out there is going to be something very positive, not just in light of the findings and the need for the measure to begin with, but also because of the fact that it's important for us to be proactive as opposed to reactive. So I support the legislation. I oppose the amendment. And I yield back the balance of my time. Is there further debate on the amendment? Is there further debate? If not, the question occurs on the amendment.
Mr. Chairman?
I'm sorry, I withdraw my point of order, and the question occurs on the amendment. There's someone seeks recognition?
Yeah, Mr. Chairman, just before we move on, I would like to submit for the record 3 letters, one National Association of Manufacturers, the American Securities Association, and the Society for Corporate Governance, and the National Investor Relations Institute.
Without objection, so ordered.
Thank you.
Yeah, there's no further debate on the amendment. All those in favor of the amendment, please say aye. All those opposed, please say no.
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 In the opinion of the chair, the noes have it. The noes have it. The amendment is not agreed to.
Mr. Chair, I request a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is sufficient second. The recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute?
I have an amendment at the desk.
The clerk shall distribute the amendment. Got it. Just to help our AV folks who are doing a fantastic job today, I'd like to kindly ask all members to please remember to identify themselves when seeking recognition. That way our AV folks can make sure we zoom the camera in on you right on time. Thank you very much. Have all members received the amendment? If so, I would like to reserve a point of order on this amendment, and the clerk will report.
Substitute amendment to the amendment in the nature of substitute to HR 1187, offered by Mr. Hill of Arkansas.
I move to dispense with the reading, Mr. Chairman.
Without objections, the gentleman is recognized for 5 minutes.
I thank my friend from Guam for the time. I appreciate again, as I said earlier, the work of Mr. Vargas in this important area of financial disclosure as it relates to our publicly traded companies. And I'm offering an amendment, I think, that replaces this underlying legislation with a study that must be conducted by the SEC to summarize and describe any inconsistencies by the different ESG disclosure frameworks before requiring any type of disclosure from public companies be directed by the Commission. Mr. Vargas's legislation, in my view, puts the cart before the horse. My amendment would correct that approach by making sure that Congress and the Commission are being thoughtful and making careful actions before creating new standards. One of the provisions in Mr. Vargas's bill requires the SEC to conduct a rulemaking that would define ESG metrics and then require public companies to disclose those metrics. This is an idea you've heard from the acting chair today and Mr. Caston about comparability, measurement across different kinds of companies. They'd like to have one metric that fits all that can be comparable. Well, this is challenging. First, the SEC, a financial regulator, a markets regulator, is not qualified to create these types of metrics, as they don't fall within that financial world of expertise. Secondly, as noted by Mr. Caston, many examples of companies that are trying to create these metrics, and they are, in fact, wildly inconsistent. Why, Mr. Chairman, are they inconsistent? Because this area is so fraught with challenge on definition. What is climate change? What is the impact of climate change on a company, on an industry, in a geography? And simply trying to boil that down to, quote, a metric is extremely challenging. If it was easy, many companies would have probably successfully done it. My staff and I are digging deeper and would be reporting back to the committee after more research. But even this discussion going on in Europe, we found the Irish funds, a representative body for investment fund community in Ireland, released the following statement about metrics. While there's been much alignment of terms as to what various initiatives seek to achieve, the landscape remains fragmented. They go on to say greater convergence is needed before anybody agrees to what should be reported and how to report it. If the industry frameworks which create these metrics day in and day out cannot agree, how in the world can the SEC staff supposed to go figure that out? Furthermore, requiring companies to comply with this type of disclosure opens them up to significant compliance costs and could result in costly litigation as well. Look no further than the result on Dodd-Frank's conflict minerals provisions that was recited by the gentleman from Michigan. I know a small cap company, $1 billion market cap company, that just on that one provision alone spends $250,000 pre-tax to comply with the conflict minerals rules. So this bill, in my view, hurts capital formation because it doesn't give people the tools that they really need to do to answer the questions about the impact of climate, for example, on their financial statements to provide comparable information. We've talked at length about materiality, and I won't, I just associate myself with the thoughts of Mr. Stile, Mr. Zanger, Mr. Barr on that topic. But let's take Mike Bloomberg's case. Mike Bloomberg, at the request of the Financial Stability Board in Europe, formed a task force on financial disclosure. He appointed 32 people, 7/8 of which, the vast majority of which, are paid by their firms to support ESG disclosure. So it was a bit of a friendly audience. And in their thoughts about trying to come up with common metrics, they couldn't do it. It says in their report, gaps in emission methodology make reliability and accurate estimates difficult. Next, it's difficult to quantify the cost and benefits related to investment priorities pertaining to climate. Next, the numerous climate scenarios, timing, and magnitude make climate-related disclosure difficult to determine, quantify, and disclose. But They go on in their conclusions and say, the Bloomberg Task Force on Financial Disclosure supports voluntary disclosure, incorporating materiality and balancing costs and benefits. And they acknowledge climate risks differ across sectors, industries, geographies, and organizations. The bottom line, Mr. Chairman, it can't be boiled down to simple metrics dictated by the bureaucrats at the commission. And I yield back the balance of my time.
The gentleman yields back. Is there further debate on the amendment?
I move to strike the last word, Juan Vargas, California.
The gentleman from California is recognized for 5 minutes.
Thank you very much, Mr. Chairman. I thank my good friend, Mr. Hill from Arkansas. I think he is attempting to find, how do we measure and how can we measure ESG and what are the metrics and have some consistency. And I do think that that's important. However, I don't think his amendment goes far enough. It certainly guts my amendment and puts in place a voluntary effort, which I don't agree with. But I think that he's right in saying that it's not easy, that it's not simple to define these metrics, to define a standard. And that's why I think it is important that the SEC take a look at it in objective fact. Is there any perfect group to do this? I don't know of any perfect group. Not against, obviously, the SEC taking a look at what other companies are doing right now. In fact, I'm sure that they will. I think that they'll incorporate that aspect of this amendment. We'll take a look to see what companies are doing today, which companies are doing it voluntarily, what they're doing, and then come up with some metrics that, in fact, can go across more companies and hopefully all companies. But again, I leave that up to them. I don't think it's going to be easy. I just think it's going to be absolutely essential, especially because we do see how the ESG factors are, in fact, creating companies that are more profitable than others. I think that, especially when it comes to environmental issues, that's going to be a really big issue. So again, I appreciate his efforts. I don't think they go far enough. So unfortunately, I have to oppose his amendment, but I do thank him because I do think it's important to take a look at what companies are doing today.
Would the gentleman yield? This is Hill of Arkansas.
Of course I will.
Thank you, my friend from California. Let me just note that I'm actually not proposing voluntary disclosure and using materiality. That's what Mike Bloomberg's doing in the task force report. But what my amendment does is it takes the concept that my friend from California has designed and asks GAO to try to help determine what the right studies of these standard setters, these competing standard setters. We have a whole nother group of people out here. Dr. Foster and I have talked about them at length. We have proxy advisors that are sort of an oligopoly that tell companies how they should design their proxy and then tell shareholders how to vote on it, and they take money from both sides. Well, we're getting that now in ESG, where we have a whole series of private sector entities that are coming up with these ESG metrics and selling those to corporations, saying this is the best way to look at sustainability, this is another way to look at sustainability, and they're in conflict, as demonstrated by Mr. Barr's discussion. So I'm arguing that we actually have GAO do a study about these variety of approaches to metrics to try to guide the SEC before they just head down the road of trying to outline and mandate metrics. I think that's the wrong approach. And Mr. Bloomberg, in his report, says that for effective disclosure, the disclosures must meet these tests. First, be relevant. Second, be specific and complete. Third, be clear, balanced, and understandable. Fourth, be consistent. 5, very important to Mr. Caston, be comparable with sector, industry, and portfolio. 6, be reliable, verifiable, and objective. And the seventh would be timely, that they can be done in a timely way, all while balancing cost versus benefit. So I thank my friend for yielding. I just wanted to say that I'm not proposing, I think we already have material voluntary disclosure now. Every public company must do that. They have an obligation, if it's material, to outline it. And many companies go beyond it and have whole sections of their website on their climate approach and strategy, just not in their financial statements. So I yield back to my friend. I thank him for the time and urge him to support my amendment for a study
so the commission gets the information they need before they go down a road with insufficient data. Yield back to him.
Well, I thank you again, Mr. Hill, for your comments. The only thing I would say is, of course, the SEC will be able to take a look at all the factors that you just mentioned, and I'm sure that they will. My bill does not prohibit them from doing that. So again, with that, I'll yield back my time. Thank you very much.
The gentleman yields back. The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes.
Thank you. Strike last word. Yeah, Mr. Chairman, I'm excited about the amendment we have here today, although it's kind of a intricate subject. I think that the gentleman from Arkansas is someone who brings a wealth of real-world experience to this issue. He's someone who is a thoughtful legislator who understands these issues. And I think, you know, having a study to actually decide after thoughtful and delving into the facts situation, I think is the right approach to this. And I think he has, struck a balance on this particular bill that I think we need to take a look at. And with that, I'd be glad to give him some extra time if he would want to, but Mr. Hill, would you like to have some extra time? I'll yield to you.
I thank my friend from Missouri briefly. I just want to again thank the debate and the discussion today. I think it's helpful. I think everybody watching and studying this knows that public companies have an obligation to disclose all material events connected to their business strategy over climate. I read these reports all the time. I know they're there. You can read in the largest property and casualty reinsurance company in the world, Berkshire Hathaway, run by Warren Buffett, certainly a progressive business leader in this country, a great investor, somebody that people respect on both sides of the aisle. He believes that in that catastrophic risk arena, he doesn't need to disclose more, that he already sees that in the pricing in his financial statements. He already discloses what he believes is appropriate, and he rejects, extra mandates in his shareholder meetings to demand that he do more. In other words, he's left it up to the board of directors and the executive management of a company to use their business judgment to properly inform investors, subject to the SEC penalties, subject to that materiality rule that we seem to cheapen in this debate. We act like it doesn't require anything. And of course, as demonstrated by Mr. Barr, Mr. Hazan.
I don't mean to interrupt the gentleman if he was suspended. There we go. I wanted to make sure the camera was properly on Mr. Hill. Please continue, sir. We were having audio-visual issues on making sure you're being properly viewed on the.
Oh, okay, thank you. So what do you want me to do about this? Is the audio on?
You were not visually on the screen. I wanted to make sure they were properly recognizing you.
Good. Well, I think my friend from Guam, people don't need to see my photo, I don't believe. They were happy to listen to my dulcet tones while Mr. Lukemeyer's picture was on the screen. But nonetheless, I want to urge my colleagues that we're making some assumption that materiality somehow is not a real thing. And, it's a real thing. And these companies are doing it. And you can read that in page after page of their annual reports and look at their climate disclosures. But when you mandate something, and people are calling for even non-material climate impact in certain industry be disclosed, that it's mandated. It's in the financial statements, it's subject to litigation risk, and you don't have an agreed upon metric for measuring it, that's problematic. And even in the public power industry, where we measure greenhouse gas emissions, so-called GHG, phase 1 emissions, when you go to more detailed analysis about greenhouse emissions, you find that financial statement preparers, auditors, corporate finance people, lawyers say it can't be done on a comparable, fair, accurate basis, just as Mike Bloomberg's task force argues. So I believe a study is the right approach and not a mandate. And I thank my friend from Missouri, and I yield back to him, and I urge a yes vote on this amendment.
I thank the gentleman from Arkansas for his disclosure of all of the wonderful attributes of our Midwestern fare. And the Hillbilly Caucus at this point yields back to the gentleman from Guam, the chairman.
The gentleman yields back. Is there further debate on the amendment? Is there further debate on the amendment?
Mr. Chair, earlier I had submitted some letters for the record, and I have 2 additional letters to submit without objection.
Without objection.
from one from the U.S. Chamber of Commerce, the other from the National Taxpayers Union.
Without objection, still ordered. Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment, please say aye.
Aye.
All those opposed, please say no.
No.
In the opinion of the chair, the noes have it. The noes have it, and the amendment is not agreed to. I also would like to record that I withdraw my point of order. Is there further discussion, though, for amendment to the amendment in the nature of a substitute?
Mr. Chair, I'd ask for a recorded vote on my amendment.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is sufficient second, and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute? If there are no further amendments, without objection, the previous question is ordered on HR 1187 and pursuant to Section C5 of Committee Rule 3. Further proceedings on the pending amendments are postponed. Pursuant to notice, the chair now calls up HR 1277, the Improving Corporate Governance Through Diversity Act of 2021. The clerk will report the bill.
HR 1277, a bill to amend the Security Exchange Act of 1934 to require the submission by users of data relating to diversity and for other purposes. Be it enacted by the Senate and House of Representatives of the United States of America.
Without objection, the first reading of HR 1277 is dispensed with. The gentleman from New York, Mr. Meeks, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to HR 1277, offered by Mr. Meeks of New York. Strike all after the enactment.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from New York for 5 minutes to explain the bill and his amendment.
Thank you. Today, I urge bipartisan support for HR 1277, the Improving Corporate Governance Through Diversity Act, which seeks to enhance the Security and Exchange Commission's diversity disclosure regime. In 2009, the SEC adopted its current board diversity rule to increase corporate accountability and improve corporate culture in the wake of the financial crisis, which economically ravaged communities of color in its aftermath. Investors demanded greater transparency around board diversity out of recognition that profit performance and inclusive governance were intertwined, especially in the multi-ethnic and multiracial democracy like America. The SEC's current rule does three things. It requires public companies to report, one, if and how they consider diversity among board nominees, two, whether they have adopted a formal policy to consider board diversity, and three, how they assess the effectiveness of their policy. However, the SEC acknowledged that companies considered diversity in different ways and declined to define diversity, giving companies too much latitude to craft a definition of their own. What was perceived as a regulatory strength then, however, has since proven to be a regulatory misstep. Because of the SEC's lack of definition of diversity, the current rule has produced abstract information, as former SEC Commissioner Louis Aguilar called it in 2010, or vague disclosures, as former SEC Chair Mary Jo White highlighted in 2016. The well-documented shortcomings of the SEC's current board diversity rule are the impetus of this bill, as well as numerous letters sent to the SEC and a host of forums, including one hosted by the Congressional Black Caucus's Foundation in 2017's annual legislative conference with a number of Fortune 500 executives of color. My bill largely tracks a recommendation from the SEC's own advisory committee on small and emerging companies. In 2017, they acknowledged what we have known for years, that the current rule has failed to generate information useful to stockholders, employees, and customers in assessing board diversity. Accordingly, the advisory committee recommended that in addition to allowing public companies to define diversity as they choose, the SEC should also require disclosure around the race, gender, and ethnicity of each board member and nominee as self-identified. Unfortunately, the SEC never adopted this common sense recommendation. My bill fixes this. The bill also requires diversity disclosures among public companies, senior management. This data is equally important since we'll never achieve robust diversity and inclusion at the board level if the C-suite is not also diversified. Finally, I would be remiss not to mention the larger conversation occurring in America about racial equality and racial equity, including closing the racial wealth gap. Conversation I have been urging for my whole career here in Congress. As a New Yorker, I understand the importance of markets to our economic fabric, but I also understand that discrimination and lack of equal opportunity remains a market failure that must be addressed by policymaking. Corporate America and America at large will never reach its full potential, both socially and economically, without fully redressing persistent barriers that have kept whole communities from being able to build wealth and share in the opportunities of prosperity this nation often celebrates. So as we continue these conversations around racial equity, this bill is a key component as it will empower investors with better, more useful data to drive diversity efforts in corporate America. This bill has achieved bipartisan support as it passed the House last Congress with 55 Republicans voting aye. Moreover, this bill has consistently been supported by civil rights groups like the Urban League, as well as key business groups like the U.S. Chamber of Commerce. Therefore, I urge my colleagues to support this most important bill. I yield back.
The gentleman yields back.
Mr. Chairman?
The chairman recognizes Ms. Wagner for 5 minutes.
I move to strike the last word. Mr. Chairman, this committee has held multiple hearings focused on strengthening diversity and inclusion in our financial system. Witness testimony has made it clear that women and minorities are underrepresented throughout the financial services sector. Corporate leaders know the value of having a wide range of perspectives and experiences in the boardroom and are being proactive in their efforts to diversify leadership in the financial services industry. The private sector knows it must do better, and the entire industry is working to achieve more diversity and inclusion. This bill will allow for more data to measure the private sector's progress, including with respect to hiring veterans. This bill is not overly burdensome nor costly. The SEC and its OMWEs are fully capable of establishing the new advisory group and already collect most of the data necessary for the required report. As a gentleman, my friend, Mr. Meeks, has expressed, industry and many groups have expressed support for this proposal, including our Chamber of Commerce. I urge my colleagues to join me in supporting this bill, and I yield back.
The gentlelady yields back. Is there further discussion of Amendment 2, the amendment in the nature of a substitute?
Mr. Chairman, Alma Adams, North Carolina.
The gentlewoman, I'm sorry, could the gentlelady please identify herself once more?
Adams, North Carolina.
Ms. Adams, thank you so much. You're recognized for 5 minutes, ma'am.
Thank you, Mr. Chairman. Move to strike the last word. Mr. Chairman, for decades, companies have been asked to make diversity a priority, both internally and externally. But over the past few years, our country has collectively experienced an awakening around the social and societal injustices that people of color face in America. The calls for change take on a greater urgency. And while hundreds of companies have been putting out their respective statements expressing their support for racial justice and equity, statements are not enough. It's time to act, and it's time to take steps towards real and substantive change. Companies and executives have also publicly acknowledged the value and the importance of diversity among the employees and across their organizations, the benefits of creating a culture of equity and inclusion. However, the lack of racial and gender diversity at the executive level, within the C-suite, and among boards of directors remains shocking. The data tells us that diverse companies with diverse leadership are stronger, more resilient, and perform better. T. Rowe Price noted in its 2018 proxy voting guidelines that, and I quote, boards lacking diversity represent a suboptimal composition and potential risk to companies' competitiveness over time. Similarly, over 90% of companies that participated in Deloitte's 2017 Board Diversity Survey agreed that the increased board diversity will improve their company's ability to innovate, as well as their overall business performance. After analyzing the performance of approximately 90 U.S. bank holding companies, two Federal Reserve economists also concluded that banks with more gender diversity on their boards, those with a female share of about 13 to 17%, perform better. Although companies and federal entities have acknowledged that their boards should reflect the diversity of their shareholders, consumers, and other industry participants, the majority of corporate and federal board appointees continue to be white men. The Alliance for Board Diversity reported that among Fortune 500 companies, 80.7% of new board directors in 2017 were white men. And that's why it's time for new strategies to increase diverse talent around the boardroom table. And that's why I'm proud to be a co-sponsor of Congressman Meek's bill, the Improving Corporate Governance Through Diversity Act, which would require public companies to annually disclose the gender, the race, the ethnicity, and veteran status of their board directors, their nominees, and senior executive officers. So the bill would create transparency and accountability around who's serving on corporate boards and encourage companies to be more thoughtful about inclusivity and composing a board that reflects the diversity of America. So before I conclude, I want to just make a brief statement to commend NASDAQ, the second largest stock exchange, for taking a stand, for being a trailblazer in pushing for diverse boards and submitting a proposal to SEC for new listing rules regarding board diversity and disclosure. This proposal is working its way through the process, and it has been met with tremendous and positive support. So it's time to make real progress on this effort, and I urge my colleagues to support this legislation. And Mr. Chairman, I yield back my time.
The gentlelady yields back. The gentlelady from New York, Ms. Maloney, is recognized for 5 minutes to strike the last word.
Thank you, Mr. Chairman. And I want to start by thanking Chairwoman Waters for moving this bill and for making diversity a top priority for this committee. We show our priorities by our actions, and this committee is not just talking about diversity, we are acting on legislation to improve diversity. Diversity in our banking system, diversity at the Federal Reserve, and diversity in corporate boardrooms. I want to thank my very good friend and colleague, Mr. Meeks, the sponsor of this legislation. He and I have been working on this issue a long time, and I thank him for his leadership, and I am so proud to be an original co-sponsor of this bill. The goal of the Improving Corporate Governance Through Diversity Acts is extremely important, increasing diversity on corporate boards. This is something I believe in passionately, and while we've made great progress, we still have a long way to go. One of the key pieces of this legislation, I believe, is getting more women and minorities and individuals from historically underrepresented communities in corporate leadership positions. Leaders set the tone, and they set the priorities. Back in 2015, I asked the Government Accountability Office to look at the gender makeup of corporate boards, and the results of the GAO study convinced me that we need to do more. Women make up roughly 47% of the workforce, and yet they hold roughly 29% of board seats at the Fortune 500 companies. The most startling finding in the GAO report was how long they projected it will take to achieve gender parity on corporate boards. The GAO found that even if we assume that equal proportions of women and men joining boards starting right now, it would take more than 40 years for there to be an equal number of women and men on the corporate boards. So clearly something needs to change. So let's be clear. Increasing diversity on corporate boards is not a social issue, it's good business too. Study after study has shown that companies with greater gender, racial, and ethnic diversity on their boards perform better financially. McKinsey found that companies with the highest racial diversity on their boards were 33% more likely to have above average profitability. A study by Credit Suisse found that companies with at least one woman on the board, just one, outperformed their competitors by 3.5% for the last decade. With these kinds of numbers, investors actually want the companies they invest in to increase the diversity of their boards. This legislation would help investors accomplish this by requiring public companies to report the racial, ethnic, and gender composition of their boards and executive officers in their annual proxy statement. The GAO found that this one very simple metric is actually very important to investors. And by putting this information in one place for investors without requiring them to go look at pictures of board members or guess the gender, race, or ethnicity of board members based on their names, the bill would help investors to quickly sort the companies that do and do not have diverse boards. The legislation would also establish a diversity advisory committee at the SEC, which would study strategies to increase gender, racial, and ethnic diversity on corporate boards. Because the truth is that making meaningful progress on board diversity is going to require a range of different policies in addition to the improved disclosures in this legislation. There is no magic bullet, but we're still trying to identify the most effective policies to increase diversity on corporate boards. So the Diversity Advisory Group at the SEC would continue to study these issues and would continue to make recommendations about the best policies in the future. It's important to note that this legislation would not be burdensome for companies. We have worked closely with the business community in this effort, and it's even supported by the Chamber of Commerce. I want to take this time to join my colleague Alma Adams in congratulating NASDAQ for on their own taking the steps to do what this legislation calls for, revealing who are on the boards in their reports, in their filings, and in their disclosures for NASDAQ. So we're moving in the right direction. This bill passed last year. I believe it'll pass again. I urge my colleagues to support this bill, and I yield back. Thank you.
The gentlelady yields back. Is there further discussion of or amendment to the amendment in the nature of a substitute?
I move to strike the last word, Juan Vargas, California.
The gentleman is recognized for 5 minutes.
Thank you very much, Mr. Chair. Of course, I want to thank the author of this bill, the sponsor. I appreciate very much. I think it's very important information. But I actually want to, more than thanking him, I want to thank my Republican colleagues. At the beginning of this hearing, I heard from the ranking member that there wasn't any bill that had bipartisan support. And I became disappointed because I remember this bill from last year thinking, well, there was significant bipartisan support on this bill. But there is significant bipartisan support. And I want to thank the gentlelady from Missouri for stating that outright. And again, I think that this is important. The information of board diversity, I think it does make a company better, more profitable when it is diverse. Obviously, the facts show that. But especially, I just want to thank my Republican colleagues for coming aboard and for voting previously, and I hope they vote in favor of it today. Again, like I said at the beginning of this hearing, I was disappointed when I heard that there was going to be no bipartisan support on any of the votes. And I thought, well, that's a change from last year because I know we had voted on this one previously. And I hope that there is bipartisan support. So thanks again. Appreciate bipartisan support, and I yield my time back. Thank you.
The gentleman yields back. Is there further discussion of or amendment to the amendment to the nature of a substitute? If not, the question now occurs on approving the amendment to the nature of a substitute. All those in favor say aye. Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment to the nature of a substitute is agreed to. The question now occurs on ordering HR 1277 as amended to be reported favorably to the House. All those in favor, please say aye. Those opposed, no. In the opinion of the chair, the ayes have it. The ayes have it, and HR 1277 is agreed to. The chair kindly asks all members to please pause as we render our items here. I thank my colleagues for their patience. We're going to go ahead and troubleshoot here. Pursuant to notice, the committee will now consider the committee's views and estimates on matters to be set forth in the current concurrent resolution of the budget fiscal year 2022 as required by Clause 4F of the rules of the U.S. House of Representatives and Section 301D of the Congressional Budget Act of 1974. The clerk will report.
Views and estimates of the Committee on Financial Services on matters to be set forth in the concurrent resolution of the budget for fiscal year 2022. Pursuant to...
Without objection, the committee's views and estimates are considered as read and open for amendment at any point. Thank you, Mr. Clerk. I now recognize myself for 5 minutes to speak in support of the committee's views and estimates. The Financial Services Committee is focused on working with the Biden administration to ensure strong, equitable recovery from the coronavirus pandemic crisis. The pandemic crisis has caused great harm in communities across the country. The virus has resulted in millions of people losing their lives, and millions of individuals, families, and small businesses are struggling. In order to ensure national recovery from this crisis, we must pass a robust budget for fiscal year 2022 that supports key programs. I am very thankful for the Biden administration's leadership in ushering the American Rescue Plan Act into law to provide essential relief to all of our constituents. I'm also very pleased that President Biden is prioritizing infrastructure, including affordable housing infrastructure under the committee's jurisdiction in his American Jobs Plan, and look forward to advancing legislation to implement this plan. The committee's views and estimates for the budget reflect strong support for the Biden administration's priorities and policies to help individuals and families as the nation recovers from this crisis. The views include robust funding for the Department of Housing and Urban Development, which will play a critical role in not only promoting the development of affordable housing, but also ensuring that renters can stay stably housed and their landlords are compensated. The FY2022 budget should also provide significant new resources to end homelessness. This will be the first budget of the Biden administration, and I'm encouraged that with the right resources, the president can begin to return the executive branch to the business of serving the American public and addressing critical racial and economic disparities in the economy. Now, is there further discussion of or amendments to the committee's views and estimates? The chair recognizes the gentleman from Missouri, Mr. Lutkemeyer.
I move to strike last word. I have an amendment to desk.
The clerk will distribute the amendment. Have all members received the amendment? If so, I would like to reserve a point of order on this amendment, and the clerk will report.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year.
Chairman, I ask for unanimous consent to dispense with the reading since it's been distributed.
Without objections, the gentleman is recognized for 5 minutes on the floor.
Thank you, Mr. Chairman. My amendment is simple. It reinforces that our economy is on the mend by examining the facts of the U.S. economy, not simply making politicized statements, which seems to be the preferred way the majority makes policy these days. Democrats want to ignore these recent economic figures. It is the only way to justify the recent behemoth spending bills they are pursuing. Politicians continue to talk down our economy. Even the Speaker of the House recently said, the economic crisis is accelerating, a statement that was specifically aimed to justify the $2 trillion Biden spending package and the $2.3 trillion so-called transportation package. This is simply not true. I find it interesting that the opening section of the views and estimates, which discusses an economic recovery, does not contain any relevant information on the economy. No statistics on unemployment, wages, savings, nothing. My amendment provides an accurate description of the economy. The CBO projects the unemployment rate, which currently stands at 6%, which is lower than the unemployment rate during President Obama's first 5 years in office, will continue to fall this year and reach its pre-pandemic level by 2022. Personal income actually increased at the end of 2020, and the personal savings rate stands at over 13%, a level not seen in 4 decades. The GDP forecasters expect the economy to exceed expectations and expand between 6 and 8% by the end of the fourth quarter. These facts don't back up the Democrats' preferred narrative. They don't justify trillions more in handouts. Now, to be clear, we know there are Americans still suffering from the effects of the pandemic. That is why last year Congress came together to pass $3.5 trillion in spending on a bipartisan basis to help small businesses and homeowners get our economy in a position to rebound, which is what it is doing by every statistical measure today. Safely reopening our economy, safely getting Americans back to work, kids back in classrooms, and vaccines to our communities is what will bring prosperity. Less than 2 years ago, Americans experienced the best economy in decades, the result of Republican economic policies. Unemployment rate in the United States reached a 50-year low of 3.5% in 2019. The unemployment rate for African Americans, Hispanic Americans, and Asian Americans dropped to their lowest levels on record in 2019. The labor force participation rate was at its highest level in 7 years, at 63.4%, including 2.2 million prime-age workers between the ages of 25 and 54, who re-entered the labor force. Between 2017 and 2019, workers saw the strongest earnings since the recession at 3.1% year over year, with average hourly earnings growing at a minimum of 3% each month. Can we get there again? Sure we can, but more spending, more government, more taxes, more of the same failed policies and false claims about an impending recession will not get us there. And with that, Mr. Chairman, I yield back.
The gentleman yields back. Is there further debate on the amendment? Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment, please say aye. Those opposed, please say no. In the opinion of the chair, the noes have it. The noes have it, and the amendment does not agree.
Mr. Chairman, can we have a vote on that? Yes, recorded vote.
Recorded vote has been requested. I will draw my point of order. All in favor of recorded vote shall raise their hand and be counted. There is a sufficient second and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute?
Mr. Chairman. All right.
The gentleman from Kentucky, Mr. Barr, is recognized. There's an amendment at the desk.
Mr. Lujan has another one. Yeah, what is it?
The chair recognizes Mr. Lukumar. Mr. Lukumar has another amendment at the desk. The clerk will distribute that amendment. white smoke. Have all members received the amendment? If so, without objection, the amendment will be considered, I'm sorry. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be
Mr.
set.
Chair, I ask for suspension of the reading.
Without objections, the gentleman is also recognized for 5 minutes to explain his amendment.
Mr. Chairman, through negotiations with your side, they will accept my amendment here with a small addition to it, which I accept. And with that, I ask for unanimous consent to continue with the bill with the amendment to it that are the changes that we both agreed to.
Without objections to order, the gentleman may continue with his amendment.
Thank you very much.
All members have received the amendment. Just for member edification, I'll go ahead and read the additional language that has been included with the gentleman's amendment. That way, if any members wish to discuss the amendment inclusive of this language, they may do so as informed. The language is added at the end of the gentleman's amendment to include the statement, "The committee will also continue to provide oversight of financial institutions and their regulators to promote safety and soundness and ensure flexibility provided to those institutions is utilized in a manner that delivers support for consumers and businesses impacted by the pandemic." That is the additional language that is agreed to by the originator of the amendment. So I'll inform now to the remaining members of the committee. Is there further debate on the amendment, inclusive of the language just read by the chair? If none, and there's no further debate, I will draw my point of order. All those in favor of the amendment, please say aye. Those opposed, no. Those opposed, no. In the opinion of the chair, the ayes have it. And the amendment is agreed to. As modified. Is there further discussion? No, we're here now.
And they didn't request.
Good vote. Okay. Is there further discussion on the amendment?
Is there further discussion of the views?
Of the review.
Of the views and estimates?
Is there further discussion of the views and estimates? I believe Mr. Barr from Kentucky, you're recognized.
I have an amendment at the desk.
The clerk will distribute the amendment.
Hey, Chewy, did you bring your mitt?
It's in the bag.
All right, good. I think next time while we're doing markups, we should just go out in the hall and play catch.
Got a little park outside my office here.
All right.
If so, I would like to reserve a point of order on this amendment. The clerk will report.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution.
Without objection, the amendment will be considered as read. The gentleman from Kentucky, Mr. Barr, is recognized for 5 minutes to explain his amendment.
Thank you, Mr. Chairman. My amendment is intended to make clear that this committee will use its investigative resources to make up for an oversight deficit in the Democrats' partisan $1.9 trillion spending package. When we consider the $2.1 trillion CARES Act just over a year ago, which was, of course, very bipartisan, Democrats then insisted on a robust oversight ecosystem to track spending by a Republican administration. The CARES Act created several new oversight bodies and directed more than $270 million to new and existing watchdogs. Speaker Pelosi even created a special House subcommittee with the power to issue subpoenas to private corporations and government agencies. But when it came to the Biden administration, the conversation about oversight was quite different. In fact, there wasn't much of a conversation at all. The American Rescue Plan created absolutely no new oversight bodies. It appropriated more than $200 million for existing oversight entities, many of which are still busy tracking CARES Act programs. And of course, there is no new House Select Subcommittee to scrutinize the Biden administration. As a result, there are gaps in the American Rescue Plan oversight framework, and perhaps that's precisely because this was entirely a partisan exercise. For example, the American Rescue Plan did not provide dedicated funds for the Office of Inspector General at the Treasury Department. That office will have primary responsibility for conducting oversight of ARP's $350 billion in direct aid for state, local, and tribal governments. In fact, the Treasury OIG has already received more than 20,000 email and hotline inquiries and 1,000 complaints related to the department's ARP programs. The $350 billion in direct aid more than doubles the $150 billion in coronavirus relief fund aid from the CARES Act, for which the Treasury OIG received $35 million to conduct oversight and recoupment activities. One would think that more than doubling that would also require at least an equal amount of Inspector General resources. But ARP aid, for which the Treasury OIG is also responsible, can be used by any state and local government for almost any purpose whatsoever with no oversight. The possibilities for waste, fraud, and abuse related to those funds are extensive. The absence of dedicated funding for the Treasury OIG, however, creates the appearance that congressional Democrats and the Biden administration, who passed the ARP on a partisan basis, intended to allow state and local governments to use relief funds without any federal scrutiny. Ranking Member McHenry introduced a bill last week to address some of these issues. His bill would extend the authority of the oversight entities created under the bipartisan CARES Act, including the Special Inspector General and Congressional Oversight Commission, to oversee the implementation of the ARP programs in this committee's jurisdiction. Unfortunately, that bill is not on today's agenda. I trust we will consider the ranking member's bill at a future business meeting. But until then, to demonstrate our commitment, I urge my colleagues to vote yes on this amendment to make clear that our committee will devote resources to conducting oversight of the Biden administration, just as we devoted resources to conducting oversight over the Trump administration. Mr. Chairman, what's good for the goose is good for the gander. As ranking member of the Oversight Subcommittee, I encourage all my colleagues, I call on my colleagues, and remind my colleagues that American taxpayers work hard. They work hard for the money that they earn and the taxes that they send to Washington. And they deserve a government that spends their hard-earned tax dollars wisely, thoughtfully, carefully. They do not deserve trillions of dollars being spent of their hard-earned money without any oversight to prevent waste, fraud, and abuse. And for that reason, and in the spirit of bipartisanship, I encourage all of my colleagues to vote in favor of oversight in this instance, just as we voted for oversight under the CARES Act. And with that, I yield back.
Is there further debate on the amendment?
Move to strike the last word. Hill of Arkansas.
The gentleman from Arkansas is recognized for 5 minutes.
I thank the chairman. I want to thank my friend from Kentucky for focusing on oversight and the ranking member. We had extensive oversight in the CARES Act. I was pleased to work with Donna Shalala in the last Congress, representing the House of Representatives on the CARES Oversight Commission. That work continues, and it's an important part of the oversight that Congress insisted on when you have trillions of dollars being spent. And clearly, all the committees of Congress have noted challenges related to accounting for those funds. So I commend my friend from Kentucky and the ranking member from North Carolina for putting an emphasis on greater oversight, and I hope my colleagues on the other side of the aisle will support this. I want to make some general comments about the views and estimates as presented by the majority. I serve as the ranking member on the National Security, International Development, and Monetary Policy Subcommittee, and I have some specific views within our subcommittee's jurisdiction that I'd like to note for the committee's background. I particularly want to focus on the IMF section. The views state that the committee welcomes the decision by Treasury to support a $650 billion allocation of special drawing rights by the IMF. I have to say to my friends on the other side of the aisle, I strongly disagree with this sentiment when it says the committee. As I've said in this hearing and elsewhere, I've long advocated against a general across-the-board allocation of SDRs under the guise of pandemic relief. An allocation of SDRs is a no-strings-attached liquidity event for all IMF member countries. There's no accountability, oversight, or transparency of this funding. The views to go on to say the committee would be supportive of the Treasury seeking congressional authority for use of the Poverty Reduction and Growth Trust Fund to increase concessional lending. And while I'm not opposed in principle to the use of the PRGT, which is in fact a targeted emergency tool for those countries most in need, it should not be used on top of a general allocation of SDRs. It's one or the other, not both. That's something that we've argued for almost a year now. It's interesting to me that the committee is supportive of congressional approval for the trust fund, but are not calling out the Biden administration for circumventing Congress in their approval for a general SDR allocation. It's curious that nowhere in the $1.9 trillion stimulus bill did Democrats deploy the international financial institutions to fight COVID-19. There are alternatives to a general SDR allocation. For instance, the IMF could have pursued a special allocation of SDRs, meaning that the IMF could actually target funding to the most vulnerable countries and not give away billions to countries that don't need it or countries that have genocidal regimes or are state sponsors of terrorism. A special allocation or another formal commitment from the IMF board could ensure that Myanmar, their military regime, would not benefit from over $700 million in SDRs. Now, the committee specifically warns against previous IMF support for Myanmar in the budget and views estimates in this document we're debating today. And yet, by commission or omission, the committee, in fact, supports $700 million going to Myanmar. So to me, that's the ultimate in documented, I won't say hypocrisy, but certainly incongruity in argument. Ultimately, the IMF section of the view seems not in line with the full members of this committee, many of whom reject the notion that China, Russia, Iran, and other rogue regimes deserve IMF support. However, other sections are not bad, and I compliment the majority. They do a good job highlighting the good work of the IMF and other international financial institutions like the World Bank, which have provided significant aid to developing countries during the pandemic. However, in the World Bank section, notably leaves out what the bank has done to promote vaccine development and concessional lending due to the pandemic. The bank has stepped up during this health crisis, and I just want to make sure they're given full credit where credit is due, both at the fund and the World Bank, for their outstanding leadership in helping those countries hardest hit by the pandemic. Overall, Mr. Chairman, the views and estimates do not reflect the sentiments of the Financial Services Committee members, and I urge my colleagues to ultimately today vote against it. I yield back the balance of my time.
The gentleman from Texas, Mr. Green, is recognized for 5 minutes to strike the last word.
Thank you very much, Mr. Chairman. I am in possession of some intelligence that I'd like to share. My friend, Mr. Barr, and I are working quite well on a good many things, and I do want to let him know that I appreciate his efforts. But as to the contention that the Inspector General, YG at Treasury Department, doesn't have dedicated funds for the office, I would call everyone's attention to page 16, line 30 of the views. And you'll find on line 30 under Inspector General, the committee supports full funding for Inspector General offices to conduct oversight. That would include one that is referenced in my friend's document. So I will have to oppose the proffer from my friend and support the views as they are. With reference to other agencies, we are charged with the oversight of these agencies by virtue of our very existence. This is what the Financial Services Committee does. I yield back.
The gentleman yields back. The chair recognizes the gentleman from Missouri, Mr. Lutkemeyer, for 5 minutes.
Thank you, Mr. Chairman. Move to strike last word, and just want to commend my good friend from Kentucky on his fine work on this bill. I think, too oftentimes we get wrapped up in the legislation that we try and pass and look at, but we forget about part of our job, which is provide the oversight that's necessary to make sure that the things that we're trying to accomplish with legislation actually get done and get done correctly. I can tell you from being the ranking member on the Small Business Committee, we just had a hearing today and had reports from the GAO and IG with regards to all of the different programs that they're implementing and have been working on over this pandemic. The PPP, EIDL program, the new restaurant program, the new venue program, all were under scrutiny today and all, quite frankly, need oversight. This is part of our job, and I think the gentleman's proposal here today is simply restating the obvious. It's not that we don't do that. I think it's something that is, I think, sometimes lacking on our part, but I think it's something that's our duty. And I think we need to be doing this. And I think I appreciate his efforts today. And if he'd like to speak a little more on his amendment, I'd be glad to yield him some time.
I thank my friend from Missouri. I appreciate his words. And to my friend from Texas, the chairman of our Oversight Committee, who I agree, we work well together and appreciate his sentiments. I would just make a point about the views and estimates language that that states, as he says, the committee supports full funding for Inspector General officers to conduct oversight. Well, that's somewhat of a relief, but when you consider the fact that this is not a normal situation, we're spending on top of the $4 trillion in additional taxpayer resources, much of it borrowed, if not all of it borrowed, from the CARES Act and its progeny. We're, in addition, through the ARP, now deploying an additional, with interest, over $2 trillion in additional funds. So it's not as if the offices of Inspector General have a normal job to do. We're talking about more than a quarter of the entire gross domestic product of the United States being deployed in less than 12 months. And so the job of rooting out waste, fraud, and abuse is extraordinary. And as I pointed out before, Treasury OIG has already received more than 20,000 email and hotline inquiries already, and the ink on the bill is not even dry yet. So you're talking about massive amounts of potential fraud here, and full funding doesn't really reach what we're talking about. Again, I would urge my colleagues to exercise a little bit of consistency. Under the CARES Act, there was an extraordinary effort put into place, and rightfully so, to provide additional resources to these oversight entities because of the massive job that was required of them. In the case of the ARP, and especially with respect to state and local aid, you're talking about more than double the amount of funds that are being deployed through the Department of Treasury than what was deployed under the CARES Act. And under the CARES Act, there was an additional $35 million. So the views and estimates simply does not capture the responsibility that has been placed on us and on the inspectors general to do the job that the ARP is required. And again, all we're asking for is a little bit of consistency. If we're going to track these funds with greater scrutiny under the CARES Act, the bipartisan CARES Act, one would hope that we would provide a similar level of oversight over a more partisan bill, and a bill that frankly spends a lot more money in ways that we are totally in the dark about. So with that, again, I encourage some consistency on the part of all members and encourage my colleagues to support this amendment, and I yield back.
Thank the gentleman for yielding back to me. And just again, to reiterate his point that this is unusual times. We're spending trillions and trillions of dollars. People are watching us. They're concerned. They're alarmed at the size of these bills and the problems that can arise with that kind of money flooding into the system and going through the various bureaucracies of this government. It's our duty to be in charge of this, to watchdog this, and I certainly appreciate the gentleman's, hard work on this issue. With that, Mr. Chairman, I'll yield back my 10 seconds.
The gentleman yields back. Is there further debate on the amendment? Is there further debate on the amendment? If not, I recognize myself for 5 minutes. You know, when you peruse the amendment, a lot of it does seem to make sense. You know, the need for us to make sure that we have resources to support the proper entities to look out for any kind of misspending, I think is something that can be agreed to on a bipartisan basis. But unfortunately, that's where it stops. It just points out that the CARES Act funded it in the previous Congress and with the previous administration, and that the funding levels are not as comparable with the American Rescue Plan, but it doesn't at all call for more funding. Instead, it calls for politicization of the process. It calls for the Congress to seek out documents and compel testimony. And really, you know, of course, oversight is a wonderful thing, and I think that it's always necessary. But we should be holding oversight over those agencies. We should be holding oversight over the inspectors general. We should be funding them first, and then having oversight over the results that they're rendering, not being the ones that try and render the results. And you know, if the intent here is to secure even more funding for those particular oversight entities so that they can have additional oversight over the American Rescue Plan. I think that that would be a great thing, and I would perhaps like to co-sponsor legislation like that from the mover of this amendment. But again, this amendment is not calling for funding for those who are tasked with the responsibility. It's calling for the Congress to take on that responsibility. And there's a reason why inspectors general are actually impaneled the way they are, and it's to make sure that these kind of reviews are as apolitical as possible. Additionally, the amendment is seeking to compel this committee to hold a markup hearing on a particular member's bill that apparently in the testimony of the mover of the amendment was introduced just last week, and the committee hasn't had a chance to review the bill, and yet we're going to be entertaining an amendment to commit to marking it up. I think that that actually is counterintuitive to the spirit of what the amendment represents, which is, you know, properly vetting something before you're actually doing it. And so I think that before we accept this amendment and before we even commit to holding a markup hearing on some language, we should first review the language. And so with that, I oppose the amendment, and I urge all members to also vote no on the amendment. Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment, please say aye. Those opposed, please say no.
No. No.
I will withdraw my point of order. In the opinion of the chair, the noes have it. The noes have it, and the amendment is not agreed to. A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is sufficient second, and a recorded vote is so ordered pursuant to the chair's previous order. The vote on this question is postponed. Is there further discussion of or amendment to the budget views and estimates? Mr. Barr is recognized for 5 minutes.
I have another amendment at the desk.
The clerk will distribute the amendment. Have all members received the amendment? If so, I'd like to reserve a point of order on this amendment, and the clerk will report.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth.
Without objection, thank you, Mr. Clerk. The amendment will be considered as read. The gentleman, Mr. Barr, is recognized for 5 minutes to explain his amendment.
Thank you again, Mr. Chairman. And this amendment, once again, is very simple. It includes a policy statement for the views and estimates of this committee, which emphasizes that our committee believes that the Consumer Financial Protection Bureau should be accountable and transparent, and urges the committee to reform the Bureau by subjecting it to the congressional appropriations process and by creating a commission to run the agency, much like many other financial regulatory agencies that are independent. By design, the CFPB is unlike any other agency in the federal government. It is practically exempt from the congressional oversight process because it operates beyond the reach of congressional appropriators. The Bureau is run by a single director appointed by the President and confirmed by the Senate. Unlike virtually every other federal financial agency, the CFPB is not run by a commission, as I said earlier. Now, the Supreme Court recently reined in some of the unaccountable features of the CFPB and reaffirmed the removal authority of the President. But still, the Bureau operates completely outside of the congressional appropriations process and instead receives funding through direct transfers from the Federal Reserve. I think it's good that the Supreme Court has reined in the Bureau somewhat and made the Bureau more accountable to the executive branch. We believe that now the Bureau should be more accountable to the American people through their elected representatives in Congress. Despite the funding arrangement that I described, the Fed exercises no authority over the Bureau. There is no dedicated CFPB Inspector General and no meaningful oversight of the director, whoever might hold the office. At my request, the Federal Reserve Inspector General investigated the CFPB's budget request process and published a report that found that there is no meaningful review or oversight of the process. I remember when now Treasury Secretary Janet Yellen was at the Federal Reserve. I asked her as chairman of the Fed whether or not she reviewed the budget request by the Bureau, and it was very clear. She said she followed the law, but there was no rigorous review. Whatever they asked for, they received. I have legislation to fix this problem. I call it the Taking Account of Bureaucrats Spending Act, to keep tabs on the Bureau, which would bring the CFPB under the appropriations process to give Congress much more meaningful oversight over that agency. The CFPB needs real oversight and accountability, something more than the basic requirement to testify in front of this committee twice a year. Often my colleagues who oppose the TABS Act say, well, the director can come before this committee. But let's face it, when Director Cordray came here, he basically said, I can do whatever I want to do, even if I come before this committee. The CFPB has certainly not been immune to controversy. We've witnessed bad behavior by past directors, especially as it relates to use of regulation by enforcement. I'm particularly concerned by the president's nominee, Rohit Chopra, who stated during his Senate nomination hearing that he's interested in going after the student loan industry and other providers of consumer credit. This is exactly the kind of adversarial posture that makes this agency highly unaccountable and suspect. Committee Republicans know that ballooning student loan debt is directly connected to rising education costs and weak underwriting standards in the federal loan program. We hope to support the committees of jurisdiction to address these underlying causes. In the past few years, we all saw how under the right leadership, the Bureau can make strides towards accountability and transparency. Let's put the Bureau on the right path. Let's hold the Bureau accountable. Let's shine the light of transparency on this agency. Let's hold it accountable through a reform agenda that includes a multi-member panel or a commission and the congressional appropriations process so that the American people, through their elected representatives in Congress, can hold this agency accountable and so that Congress retains its rightful role as the lawmaking authority and not delegate its lawmaking authority to unelected, unaccountable bureaucrats at the CFPB. I urge my colleagues to support my amendment and I yield back the balance of my time.
The gentleman yields back. Is there further debate on the amendment?
Mr. Chairman,
The gentleman from Missouri, Mr. Lukemeyer, is recognized.
move to strike last word. It was not long ago that my colleagues on the other side of the aisle bemoaned the actions of former CFPB Director Kraninger and her predecessor, Mick Mulvaney. My colleagues would lament the actions and inactions of the former directors, criticize rules and regulations coming out of the Bureau, and push the narrative the directors were openly allowing consumer harm. Despite those complaints, the majority refused to take common sense steps to increase congressional oversight in the most powerful federal agency in Washington. This oversight will ensure the Bureau is meeting its intended mission of protecting consumers and using its power appropriately. Mr. Barr's amendment simply expresses concern with the current structure of the Bureau and recommends subjecting the Bureau's funding to the appropriations process and restructuring the Bureau as a commission instead of a one sole director. It was not long ago that the idea of a commission at the CFPB was bipartisan. A bipartisan CFPB commission would help promote better policy discussions with the intent of having more thoughtful and meaningful regulations implemented. It would also help discipline the Bureau's managers by forcing them to articulate and debate the rationale and evidence of proposed actions, producing better informed policies and reducing the threat of biased or politically motivated decisions. Without a commission, the CFPB will continue to operate as a political football, swinging from one extreme to the other. Currently, the CFPB does not even have a permanent director, and even still, the Bureau has already rescinded Director Kraninger's rule on the Bureau's authority on abusive acts and practices, delayed the implementation of the debt collection rule, and rescinded numerous guidance documents associated with the pandemic. It's high time this committee gets serious with its duty of overseeing all the financial regulators and make some immediate reforms to the CFPB. I thank my colleague from Kentucky for his hard work on this issue. I know he's been a champion of trying to reform the CFPB. I certainly support his amendment, and with that, Mr. Chairman, I yield back.
The gentleman yields back. Is there further debate on the amendment? Is there further debate on the amendment? If not, I recognize myself for 5 minutes. I oppose the amendment which would weaken the Consumer Financial Protection Bureau's structure of a strong single director agency to a potentially paralyzed multi-member commission. And that can happen in a variety of ways, notwithstanding the fact that just not being able to get commission members, appointing members to the commission can in and of itself completely dismember the work of the Bureau. Additionally, I just find the language of the amendment interesting when it somehow tries to make a concern out of regulation by enforcement. I really believe that you should be enforcing regulations. I'm confused as to why, being regulated by enforcement is something that all of a sudden is, I'll yield to the gentleman.
Sure, just to clarify, if that wasn't clear, what we mean by that is that there's not a notice and comment rulemaking process pursuant to the Administrative Procedures Act, and the rules of the road are not clear to industry participants or regulated parties. Instead, there's an attempt to regulate through ad hoc enforcement, circumventing notice and comment rulemaking. The lack of accountability at the agency means that the agency doesn't adhere to the rules of the road as frequently as agencies that would be subject to a multi-member commission or accountability through the appropriations process. So the idea is, let's not have an enforcement agency out there that doesn't go through rulemaking and then enforces the rule, and instead just makes up the rules as it goes along, and regulated parties have no idea what to expect. It's a due process problem. I yield back.
Well, I mean, if there's a due process problem, then of course there's multiple avenues for those impacted parties to be able to avail of their due process. But the issue I'm concerned with on the amendment is that it very clearly states right after saying that regulation by enforcement is somehow problematic, it says, instead of providing clear rules of the road for all consumer financial market participants through the rulemaking process, etc., it's looking like it's intending to shift the CFPB away from being a consumer protection bureau and being something that's more interested in trying to ensure that all financial market participants are somehow okay with what it is they're looking into or what it is they're enforcing. And the whole intent of the Consumer Financial Protection Bureau is to protect the consumer. And so when the consumer is not protected, the consumer loses out on being able to avail of the support that the agency would have provided otherwise. The commission structure would not work, and it would not be able to turn over 12 billion to over 30 million consumers, as was the case under Director Cordray, who was responding effectively to the consumer complaints database. Oftentimes, consumer complaints will materialize, and that's when enforcement steps in order to make sure those complaints are properly addressed. If the question is, are we going to make a rule before the complaint gets addressed, that we're going to be preventing consumers from having an advocate as aggressive on their behalf as the Consumer Financial Protection Bureau has proven to be, and I really think is necessary for us to continue to be. Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment, please say aye. All those opposed, please say no. In the opinion of the chair, the noes have it, and the amendment is not agreed to. A recorded vote has been requested. All in favor of a recorded vote, please raise your hand and be counted. There is sufficient second, and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the BVE?
Mr. Chairman?
The gentleman, Mr. Heisinger.
Yeah, Mr. Chairman, I have a amendment at the desk.
The clerk will circulate the amendment. Have all members received the amendment? If so, I'd like to reserve a point of order on this amendment. The clerk will report.
Amendment to the views and estimates of the Committee on Financial Services offered.
Thank you, Mr. Clerk. Without objection, the amendment will be considered as read. The gentleman, Mr. Heising, is recognized for 5 minutes to explain his amendment. I guess that means that the amendment is not going to proceed. 1 moment, Mr. Heising, we'll fix your technical difficulty.
We're okay down here. Same. Here you go.
Serious.
All right. Well, thank you, Mr. Chair. My amendment is important to everyday investors. They deserve to hear that this committee will focus on expanding their investment opportunities. It's as simple as that. Antiquated regulations like the, quote, accredited investor rule keep most Americans out of high-growth investment opportunities. This outdated framework prevents investors from all walks of life from accessing certain private market investment opportunities, and we need to remove those roadblocks in the interest of fairness. Last Congress, the Republican-led SEC worked diligently to expand the definition of an accredited investor to include people with professional knowledge, experience, and certifications based on defined measures. I applaud those efforts, but we need to go further, and I think we all know the famous story of Ben Bernanke, chair of the Fed, not being an accredited investor himself, which doesn't seem to make a whole lot of sense. While I and my Republican colleagues are focused on opening our capital markets and our financial system to more people, not just those folks who are already rich and connected, and this amendment supports that goal. This amendment expresses support for expanding compensation opportunities for startups and for their workforce. Non-traditional work.
They've all disconnected, so they're coming back now. Correct.
Say again.
All the
Apologies, we're experiencing technical difficulty. 1 moment, please.
Okay, test.
Please continue, Mr. Heisinger.
All right, we're good?
Yes. Let's go ahead and add some time back onto the clock too for Mr. Heisinger. 340, please.
3:40, all right. Well,
30 more seconds.
do we know how much of, was it like 40 minutes ago that they cut out? How much do I need to go back in to convince you that this is the right policy?
You know what? That brings it down to 20 seconds, Mr.
All right. Well, let me, reclaiming my time from the hobgoblins of technology, Mr. Chairman. Last Congress, the Republican-led SEC worked diligently to expand the definition of an accredited investor and to include people with professional knowledge, experience, and certifications based on defined measures. We know that there are, for example, college professors who have technical abilities and technical knowledge that aren't qualified. The famous story of Ben Bernanke not being a qualified investor defies logic. And so I applaud those efforts, but we need to go further. So I and my Republican colleagues are focused on opening our capital markets and our financial system to more people, not just those folks who are already rich and connected and have no problem finding those investments. This amendment supports that goal. This amendment expresses support for expanding compensation opportunities for startups and their workforce. Non-traditional workers, known as gig workers, should have the ability to receive equity compensation just like traditional employees. Ultimately, then, this amendment is about leveling the playing field. In response to the GameStop situation, some of my friends across the aisle advocated for policies that would protect retail investors. If my colleagues really want to help secure the future of retail investors, then I look forward to their support of this particular amendment. However, I fear that some of them will continue to tell people what's best for them and that they can't do it with their own money. And if there's one thing that we've learned from the GameStop situation, it's that everyday investors are far more sophisticated, informed, and capable than anyone in this room gives credit for. This amendment emphasizes the committee will work to remove burdensome requirements and expand investment opportunities for these everyday investors while maintaining appropriate investor protections, a key part. That should be a priority for both sides of the aisle. A yes vote on this amendment means you agree that we should not limit the opportunities for everyday investors and instead focus on how markets can work for them, not against them. And with that, I yield back.
The gentleman yields back. Is there further debate on the amendment?
Move to strike the last word.
The chair recognizes Mr. Gonzalez for 5 minutes.
Thank you, Mr. Chairman. I ask my colleagues to support my good friend, Mr. Huizenga's common sense amendment. Over the past year, we've seen an incredible growth in retail investing by everyday Americans who want to put their money at work to build a better future for themselves and their families. This is something that we should applaud and encourage as long as there are appropriate investor protections that remain in place. What an interesting part from a market standpoint. So much of the value creation that's happening today is happening in the private markets. It's happening away from the public stock markets, which means, by definition, retail investors are excluded. Mr. Huizenga did a great job of highlighting some of the ridiculousness around that. But as a result, what ends up happening is that the vast majority of the wealth creation accrues to those who are connected to the best venture capital and private equity funds, those who are already wealthy, those who are already well connected, those who have the bulk of the advantages in the financial system. That's where the value creation goes. That's where the wealth creation goes. And everyday investors, retail investors, who may or may not be, who oftentimes are very sophisticated, as we've seen in recent months, are completely excluded. And so what happens? The wealth gap widens, the rich get richer, and those who by all intents and purposes should be able to participate in the private markets are excluded. So as a committee, I think and I hope that we can work in a bipartisan way to find opportunities to allow more Americans to safely access private markets. This will truly create a more level playing field with Wall Street and Main Street and allow our constituents to have more options in their investment decisions. We saw Chairman Clayton take good steps toward this in recent years, but we should also look to legislative solutions. For example, I do think we should look at the opportunity to expand access to private markets through closed-end funds. This will provide retail investors all the protections that are associated with closed-end funds, while also allowing access to high-growth opportunities. I hope this is something we can work on in a bipartisan way this Congress. As we continue to have conversations about the democratization of finance, we should start by accepting this simple amendment that states that our committee will work to ensure that everyday investors have as many investment opportunities as possible. I think we owe that to our constituents. I think we owe that to everyday investors. They should be able to play with the right protections. They should be able to play right alongside of some of the wealthiest and well-connected players in the industry. If they do get that opportunity and that freedom, they'll be able to create better lives and better outcomes for their families. I encourage support for Mr. Huizenga's amendment, and I yield back.
The gentleman yields back. Is there further debate on the amendment? Is there further debate on the amendment? If not, I recognize myself for 5 minutes. Personally, I think that the language of the amendment is fine with the exception of what appears to be the second paragraph. And the second paragraph specifically reads, "This includes protecting recent regulatory efforts to expand the definition of accredited investor, as well as considering legislation to further expand on these regulatory improvements." I take a different perspective on what the second paragraph does as opposed to what's been claimed. You know, an accredited investor threshold is required to be able to invest in those particular vehicles that are taking advantage of specific exemptions from having to register with the SEC as a result of accepting accredited investors. And so if they want to expand to accept beyond accredited investors, they just need to register with the SEC, not take advantage of that exemption, and then from there follow the regulatory environment that the SEC would provide. And that regulatory environment exists, as we've been discussing all day today, to protect consumers. And we've debated about whether or not those kind of protections actually need to be expanded. And that's basically what is foregone when these firms take advantage of the exemption that doesn't require them to register with the SEC, because they're only accepting what is defined as accredited investors. And so the way the law was structured was it's basically designed so that somebody who has X amount of assets and meets the accredited investor threshold is somebody that's more or less reasonably understood to be able to take on the risk of investing in an unregulated environment, or at least a not as regulated environment, as otherwise would be the case if they had to register with the SEC. And so expanding the definition of accredited investor is basically cutting off both ends of the stick, because now not only is the firm not having to register with the SEC and taking advantage of the accredited investor exemption, but now that very exemption, the very nature of that exemption is being watered down to the point where they're unregistered, and they're also accepting investments from people who might not be able to manage the outcomes of what those particular investments may yield. We've seen hedge funds fail. And hedge funds today aren't really having a problem, trying to solve a problem on the hedge fund side necessarily. But if it's trying to create more access for consumers, I think that we have such a variety of products out there already. For people who don't meet the accredited investor threshold to still be able to take advantage of what's out there in the general investing environment on a regulated basis. And so I oppose this amendment. I think that we just need to constantly strike the balance between general public exposure within a clearly regulated environment and accredited investor exposure to those firms that are taking advantage of that exemption to the regulations that are currently in place at the time. And so it's for that reason that I would object to the amendment, but I will yield to Mr. Huizenga.
Thank you. I yield for a question. Well, maybe first an observation. You're right, those hedge funds aren't having a very difficult time raising money right now. The question is from whom? Very wealthy accredited investors already. So those folks don't need to be taken care of. It is those that are not able to access it. But I am curious, in that second paragraph, are you objecting to the protecting recent regulatory efforts portion of that, or after the as well considering legislation to further expand these regulatory improvements?
My concern is in expanding the definition of accredited investor and expanding on what's being called regulatory improvements, which were relaxations of the definition of accredited investor. Those are my concerns.
And so you've been supportive, or do support where we have gone recently, though, with the expansion of the accredited investor definition?
No, I believe that the accredited investor definition actually over time has expanded itself. It was ever since, I believe, and the staff provided this information to me, 1983 that standard was established. And so just over time, inflation has completely washed out what the definition of an accredited investor was back in 1983. We have, again, according to the staff, 5 times the number of households that now qualify as accredited investors. So, what the market and the ability for those investors to be able to access has actually increased, because we have not expanded the definition to make it more restrictive. And so I think that it has expanded over time. I don't think we should be expanding it further. My time has expired. I thank the gentleman for his questions. The gentleman from Texas, Mr. Green, is recognized for 5 minutes to strike the last word. Mr. Green from Texas, you are recognized to strike the last word. Okay, my error. Is there further debate on the amendment? Is there further debate on the amendment? If not, the question occurs on the amendment. I will draw my point of order. And all those in favor of the amendment, please say aye. Those opposed, please say no. In the opinion of the chair, the noes have it, and the amendment is not agreed to.
Mr. Chairman, I request a recorded vote on that
A
amendment.
recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the budget views and estimates?
Hill has an amendment at the desk.
The clerk will circulate the amendment.
Yeah, we'll see. Yep. See you later. Yep.
If so, I would like to reserve a point of order on this amendment and ask the clerk to please report.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent
Without
resolution.
objection, thank you, Mr. Clerk. The amendment will be considered as read. The gentleman, Mr. Hill, is recognized for 5 minutes to explain his amendment.
I thank the chairman. I would say it's rare that we can have, that we can say with complete certainty whether our actions in Congress will be judged by history. But surely our response to the Chinese Communist Party and its assault on basic human values will be studied for generations to come. As Secretary of State Blinken and Secretary Pompeo before him concluded, the Chinese government's persecution of Uyghurs and other minorities in their country can only be described as genocide. China also continues to attack freedom and democracy in Hong Kong. And finally, Beijing continues to threaten Taiwan through its military exercises, launching last month its largest incursion ever in Taiwan's airspace. Those are the facts, Mr. Chairman. So I ask you, does this sound like a regime that the United States should be offering over $40 billion in no strings attached liquidity? Of course, that question appears ludicrous, but that's precisely what's currently at stake with the International Monetary Fund, the IMF, whereby the Biden administration is considering a massive allocation of new special drawing rights. My amendment, Mr. Chair, is simple. It calls out China's abuses and urges the administration to oppose these SDR. I've been working on this issue since September, and I'm very disappointed by the views and estimates expressed by this committee. I've long advanced and advocated the idea that an allocation of SDRs first and a general allocation is the wrong approach. That's outlined in the Wall Street Journal and in the Hill. And I'd ask unanimous consent that these two opinion pieces be entered into the record.
Without objections.
As outlined in these articles, the SDRs serve unconditional liquidity. The funding is not targeted or tailored and does not tied in any way to the pandemic. China could use this $40 billion in funding to give the money to rogue regimes, to fund their recent agreement with Iran, or develop countries in the Belt and Road Initiative. In fact, Mr. Chairman, just last year, this committee led the Congress, and the Congress agreed in strong bipartisan terms to chastise China for their non-transparent lending in the Belt and Road and to call for the World Bank and the IMF to disclose that transparency. And, Mr. Chair, just last week, the Minister of Finance in Japan echoed his concerns about this SDR allocation and the fact that China might use it to advance their Belt and Road lending. Further, China could give this money to Myanmar, where the committee specifically warns about in their views. But let me be clear. Even if you do support a broad general allocation of SDRs, you can still support this amendment. All the amendment calls for is the opposition to no strings attached money for China. If the Biden administration is dead set on SDRs, it could work with the IMF board towards a special SDR allocation, which would include certain countries like China from receiving any funding. With China already sitting on $3 trillion in reserves, it simply could use the SDRs to free up funds for its ambitions abroad. However, it ends up using them. SDRs are not about COVID, and they're not about advancing America's objectives. I strongly support providing funding to the countries that need it, but the majority of SDRs would go to countries with strong economic standing. The budget views state that 40% of the SDR allocation would go to low-income and emerging market countries. That is inaccurate, Mr. Chairman. That statement in the views and estimates is very misleading. SDR supporters know that less than 7% would go to countries in sub-Saharan Africa, about as much as China would receive all by itself. Rich G7 countries would receive over 40% of this allocation. Secretary Yellen herself acknowledged how poorly targeted SDRs are. So again, Mr. Chair, my amendment is limiting Beijing. The future will judge our decisions regarding China and the Chinese Communist Party as one of the largest beneficiaries of this SDR funding. Some of those decisions may be difficult, but opposing the SDR allocation to China should not be one of those. By adopting my amendment, the committee can call on the administration to prevent an IMF giveaway to the Chinese Communist Party. This should be a straightforward yes vote for Democrats and Republicans alike, and I urge my colleagues to support this amendment. I yield back.
Is there further debate on the amendment? Is there further debate on the amendment? If not, I recognize myself for 5 minutes. I absolutely agree with the language that raises concern in the amendment about the genocidal actions in Xinjiang and the suppression of freedom in Hong Kong. My concern in supporting this amendment is that it automatically assumes that the provision of billions of dollars in IMF special drawing rights is something that we need to oppose. And while on the surface, on a very, very surface level, I can see that the knee-jerk reaction to oppose is something that everyone would probably want to jump on. But I would like to further inquire whether or not those SDRs could potentially be part of greater foreign policy negotiations that are currently ongoing. And if taking an immediate response to oppose it might actually be getting in the way of mitigating some of the concerns that are part of this amendment, or mitigating other concerns that might actually be achieved at a foreign policy level.
Would the gentleman yield?
I would.
So you raise a good point. I'm glad to know that the committee is interested in the Biden's administration's foreign policy negotiations with the G7 regarding this. I would urge just the counter to the gentleman's question, because the Congress coming out strongly opposed to rogue regimes getting a special, a general allocation of SDRs will strengthen the hand of the Biden administration in talking to the G7 countries and other countries and members of the IMF board about approving a special allocation targeting this relief for pandemic relief and not a general allocation that benefits the majority of rich countries and rogue regimes alike and does not target. So I yield back to my friend.
I thank the gentleman for his point, and I guess it's just a difference of approach. I would, as opposed to saying the door is shut and, do you want me to open it? I would prefer to have somebody be able to go to the table and say the door is open, do you want me to close it? And really, that's just all about how you come to the table and what it is that you're going to be, how you're going to be approaching the conversation in general. But I do think that having a greater eye towards whether or not these are going to be having any kind of diplomatic value is something that we should know before we stand up and directly oppose it. And I wanted to kind of cite some information that was also provided in reviewing the proposal, and that is that, if you'll excuse me, we do have it on the record that Secretary Yellen's decision to support an expansion of special drawing rights signals a renewed U.S. commitment to global economic cooperation, as it will help developing and emerging economies cope with the health and economic impacts of the coronavirus and help revitalize the U.S. and the global economy. And so, we have had an administration previously that definitely took more of a stick than a carrot approach, and I think that we may have an administration that may try more of a carrot than a stick approach. It's hard to tell, really, what's going to work all the time.
Would the gentleman yield on that point?
I would, yes.
Yes, I thank the gentleman. So this is a key point. There's nothing here that has seen nothing but leadership from the United States. The United States has led the G20 countries in concessional lending through the Paris Club for all the countries hardest hit by the pandemic. The Americans in the Trump administration and in the Biden administration have supported the IMF in concessional loans to over 83 countries already. They've supported the World Bank, expending $160 billion to the third world countries, particularly for vaccine distribution. So the Trump administration was very good at using multilateral support of the third world, and I know the Biden administration shares that view. This is why we need targeted pandemic support of the poorest countries struggling under the pandemic, and not a general allocation that benefits rich countries to the detriment of the poor and benefits rogue and terror regimes to those that follow the rule of law.
So I thank the gentleman for his point. Again, my concern arises from the fact that we're going to be in this amendment coming straight out and opposing a provision that may actually be of greater benefit if we were to allow the foreign policy decision makers to actually be able to go to the table with the opportunity and present it as stated. There's also some movement to also be able to kind of, use this very, very strategically where the U.S. is going to be able to offer to extend those SDRs for additional loans to lower income, lower strata countries, and then extend the same to China, the same expectation, and put them on the block for it. So, I think we're kind of saying the same thing and maybe taking a different approach on it, but I do appreciate the gentleman's amendment, but I do oppose it. Is there further debate on the amendment? Is there further debate on the amendment? If not, I will draw my point of order. The question occurs on the amendment. All those in favor of the amendment, please say aye.
Aye.
Those opposed, please say no. In the opinion of the chair, the noes have it, and the amendment is not agreed to.
Mr. Chair, I'd ask for a roll call vote, please.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is sufficient second, and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the budget views and estimates?
Mr. Chair, I have an amendment to ask.
The clerk will circulate the amendment. Have all members received the amendment? If so, I would like to reserve a point of order on this amendment, and the clerk will report.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year 2022, offered by Mr. McHenry of North Carolina. Page 17, line 11, after the period, insert, the committee commends the Biden administration's public support for nuclear energy.
On the amendment, the gentleman is recognized for 5 minutes to explain.
Well, thank you, Mr. Chairman. And this amendment is a one-sentence addition, and it says exactly what the clerk just said. The committee commends the Biden administration's public support for nuclear energy. This is not praise. I think praise is worthy of the administration for acknowledging nuclear energy. It is not overly laudatory, but it is, I think, notable. I think commends is in fact a good balanced word for the nature of this. As we know, the president has proposed an infrastructure package under the moniker of the American Jobs Plan. Many of the details of this proposal remain unclear, but there are already clear indications that Democrats will seek to go it alone rather than develop a bipartisan package. I'm hopeful we can have a bipartisan package on this. I think infrastructure should be bipartisan. Now, having said that, it has been encouraging to see President Biden underscore the importance of nuclear energy. According to the White House's fact sheet, the president's infrastructure plan will, quote, leverage the carbon pollution-free energy provided by existing sources like nuclear and hydropower, end quote. The administration also calls for significant R&D investments in nuclear technology and calls on Congress to ensure the production of nuclear reactors and fuel. And why wouldn't the president acknowledge nuclear energy's benefits? It's not the whole answer. The life cycle of greenhouse gas emissions of nuclear power are comparable to renewables. That is commendable. Nuclear is our country's largest source of carbon-free energy, and it makes up 30% of low-carbon electricity worldwide. In the United States, nuclear energy accounts for as much electricity generation as wind, solar, and hydro power combined. Now, I am for an all-of-the-above approach when it comes to energy production. I believe that climate change is real. I believe that we must tackle climate change and at the same time focus on growth, economic growth. I think we can balance the two. I think we can conquer a major generational challenge and do so without destroying our economy. And I think it is praiseworthy that this administration is signaling it will embrace nuclear energy. On this committee, we've already dealt with a nuclear debate through the Export-Import Bank last Congress, and there's been bipartisan support for expanding nuclear's footprint abroad. Look, I think we have to make sure that everything's on the table for power production, for innovation in terms of power production in a way that is low carbon. I think we need to look at carbon sequestration, and we need to have incentives in place for new types of technology that can help us tackle climate change. But I do think it is important that we acknowledge those people that are reaching across the aisle, like this administration is attempting to do with nuclear power, and acknowledging that when we need more energy production, we want to make sure it is low carbon. We need to make sure it's the cleanest power generation possible. And that clean energy is a clear component of our economic future. It is not some secondary issue. It is absolutely important and absolutely vital that we work through this together and tackle climate change. And I think nuclear is certainly a part of that mix. So that's the amendment. I encourage its adoption and hope that we can have bipartisan support. Yield back.
Is there further debate on the amendment? Is there further debate on the amendment? If not, I have an amendment to the pending amendment by Mr. McHenry at the desk. And we'll pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? If so, then without objection, the amendment will be considered as read. I recognize myself for 5 minutes to explain my amendment. I actually find the commending language of the original amendment to be laudatory in and of itself, and I'm looking forward to even more similar adjectives for future work of the Biden administration from my dear friend from North Carolina. That being said, I also think that it's important for us to try and build as much consensus as possible for what the original amendment is intending to achieve. And I feel that a change in the adjectives might actually help in the intent of the original amendment to pull in greater support for the underlying purpose of the amendment, which was the support for nuclear energy. And so my amendment to the amendment would be to, after the committee, strike all and replace with the following. Quote, acknowledges the Biden administration's public support for nuclear energy and looks forward to reviewing any proposals his administration puts forward, end quote. And so the main change would be a transition of the adjective of commends to acknowledges, and to also making it very clear the committee is looking forward to reviewing any proposals from his administration on nuclear energy. Is there further debate on the amendment?
Mr. Chairman, I move to strike the last word.
The gentleman is recognized.
I'm opposed to this amendment. Look, when I said commends, that is, I think, the bare minimum level of positive comment about the administration's public support for nuclear energy. This replaces the word commends to acknowledges, which is like saying it exists. Well, you're darn right it exists. It's part of their proposal. So saying you acknowledge it is like saying I acknowledge gravity, right? It doesn't matter whether or not you acknowledge gravity. Gravity works upon all of us. And look, this is, I understand there's a, well, what this amendment tells me is that there's deep fissure within the Democrat Party on whether or not we use nuclear power. And this tells me there's something else afoot, which is, the Green New Deal is not about climate change, it's about changing society. And so why don't we embrace low carbon energy on every possible venue? And I, for one, believe we should do that. I've said clearly in this committee, and our committee votes, that climate change is real and we need to take action, and that action needs to be bipartisan. And I've been quite outspoken about my view of that. Now, that's not every view in my party, I acknowledge that. But let's also acknowledge within the Democrat Party is that there are these folks that won't acknowledge the lowest carbon power source, which is nuclear, and that is far better than natural gas, far better than coal in terms of carbon emissions. We should be doing everything we can to change our power grid to something as low carbon. And so it's not just about wind, it's not just about renewables. Let's use the technology as it is. So look, I understand you got to, the party has these fissures. Your party has these fissures, and that's what this amendment exposes to me. But I thought a simple amendment where there is bipartisan support on something as a really partisan day would be something, I don't know, reasonable and good. And frankly, I'm looking for ways to have bipartisan votes on things that are related to climate change, because I think it's important that we show our constituents and the American people and, folks around the globe that we are serious about fighting climate change. And instead, we get into this ridiculous set of semantics about whether commends is too laudatory about nuclear power. This tells me how ridiculous this debate is on climate change, and with this type of gamesmanship from both parties, frankly, we're not going to get anywhere to tackle climate change with this type of stuff. So I'm sad about an amendment like this, but, you know, if members on your side of the aisle, Mr. Chairman, if Democrat members aren't comfortable even commending the Biden administration's public support for nuclear energy, then so be it. They got to be on record for this. But protecting them by saying we acknowledge that the Biden administration has said these things and written these things, and you know, this is a bunch of bull. So I oppose the amendment. Understand the gentleman has to offer amendments for his party to protect members that otherwise wouldn't want to vote on something very reasonable that the vast majority of the American people support. You know, but that's Washington, that's politics, and that also highlights the partisan nature of today's partisan markup. So with that, I urge no and yield back.
Will the gentleman yield?
Oh, yes, I'd be happy to.
Thank you. I just want to clarify that I don't think there's a representation of fishers. I don't think there's a representation of me having to do anything for my party. I just like to try and build consensus as much as possible. And if it can be built around the issue, which is nuclear power, if it can be built around the issue, then let's stop hashing over adjectives and let's stay focused on the issue. And, you know, the change in language may be a softer adjective, but if that softer adjective is helping us to stay focused on the issue, acknowledging the issue, looking forward to receiving and reviewing proposals on the issue, then I think that helps to keep moving the issue forward. And personally, as a moderate myself, that's something that I always like to focus on. And so I do not do things because I have to, and I definitely don't in any way represent fishers in the proposals that I put forward. I, for one, would just like to focus on the issue and not on the adjectives. And with that, I yield back.
And I certainly understand. And I don't mean this is about making personalities about it. Because this is not about you or I, it's about the substance of the debate. And Mr. Chairman, you've been very good about engaging in the substance of debate and not personalities. And I want to commend you for that. Not acknowledge you, but I'd like to commend you for that. And with that, I yield back.
Well, I'll take that commendation any day of the week, Mr. Ranking Member. Without objection, the amendment will be considered. I'm sorry. Is there further debate on the amendment? Is there further debate on the amendment? If not, the question occurs on my amendment to the amendment by Mr. McHenry. All those in favor of the amendment say aye. Aye. Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment is agreed to.
And I ask for a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute?
I have an amendment at the desk. The ultimate amendment, today's views and estimates.
The clerk will distribute the amendment. Have all members received the amendment? If so, I would like to reserve a point of order on this amendment, and the clerk will report.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be
Without objection, the amendment will be considered as read. The gentleman, Mr. McHenry, is recognized for 5 minutes to explain his amendment.
Well, thank you, Mr. Chair. This is the last amendment of the day, and for that, I think that is worthy of praise. And the gentleman's been in the chair a long time, and so I want to commend him for holding it together without any food and without leaving the chamber. So I think that's pretty noteworthy. Look, my amendment here is simple. It states that the committee opposes financial transaction taxes, known as FTT, both at the state and federal levels, that this committee opposes those taxes. Financial transaction taxes are taxes on Americans' retirement savings. Some FTT proponents claim that a federal financial transaction tax would only affect the wealthiest investors. That is simply not true. The truth is, this tax would hurt middle-income Americans saving for retirement, their child's college education, or trying to buy their first home. I really don't think any member of this committee wants to hurt millions of Americans who are striving to reach their long-term financial goals. Understandably, committee Republicans are the folks, and the folks we represent are concerned that a number of Democrats in Congress have endorsed a federal financial transaction tax proposal. Even candidate Biden supported a federal financial transaction tax. But I would hope that everyone on this committee, including my Democrat friends, understand the harm that any federal financial transaction tax or state financial transaction tax, that those taxes would cause great harm. So let's set the record straight right here and right now, and reassure the American people that no one on this committee wants to take away their retirement savings. Let's look at the facts quickly. First, savers would be hit. Retirement savers using a mutual fund as their savings vehicle may have to work an additional 2.5 years or more to achieve the same retirement goal. Second, a financial transaction tax would adversely affect the markets. We have the most robust liquid capital markets in the world. That is something we need to keep. A federal financial transaction tax would be really a harmful effect on American markets and competitiveness globally. And no one wants that. Third, these taxes almost always fail to raise the revenue their supporters claim. We've tried this before. It didn't work. And nonetheless, some Democrats are counting on this type of tax to create revenue to fund their massive spending agenda. That's just bad math. I hope everyone here agrees that a financial transaction tax is a terrible idea for everyday Americans. And in that case, I welcome unanimous support for my amendment. If, however, Democrats are not ready to accept this amendment, I ask that the chair hold a hearing on the financial transaction tax, as I similarly called for one last Congress, so that we can educate both Democrats and Republicans and the American people on the full extent of the threat that this tax would pose. After such a hearing, I would anticipate amendments like this would be viewed as non-controversial and part of next year's views and estimates. And I'll say, if Republicans are in charge, it will be part of next year's views and estimates. So with that, urge its adoption and yield back.
Is there further debate on the amendment? Is there further debate on the amendment? If not, the question occurs in the amendment. All those in favor of the amendment, please say aye. Aye. Those opposed, please say no. In the opinion of the chair, the noes have it, and the amendment is not agreed to.
And I ask for a record vote.
A recorded vote has been requested. I will draw my point of order. All in favor of a recorded vote shall raise their hand and be counted. There is sufficient second, and recorded vote is so ordered. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the budget views and estimates? If there are no further amendments, without objection, the previous question is ordered on the budget views and estimates, and pursuant to Section C5 of Committee Rule 3, further proceedings on the pending amendments are postponed. There being no other matters pending before the committee, the chair wishes to inform members that votes will occur at approximately 10 a.m. tomorrow, April 21st. We will vote on all postponed matters. And with that, I thank my counterpart, the ranking member, for joining us to the end of this hearing and to the recess of this hearing, and the committee stands in recess until tomorrow at 10 a.m.